Good afternoon. This is Sherry. I'm your host for today's Traders Exclusive webinar. We are going to be talking expert trading tips and tricks for Q3. I want to ask that you please check out our website, TraderInsightcom. We regularly post articles and video clips with valuable trading tips and techniques. And this is also where you'll find a recording of today's webinar. I did put a link in the so that you can go straight to it. So if you miss anything while we're on this webinar today, you'll be able to go back there and see it in its entirety. And before we get started, I'd like to share a quick disclaimer. You should carefully consider whether trading is suitable for you in of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. First off, for today, please hold your questions after each presenter is finished. There's going to be a time after the presentation is done where you'll have time to ask questions and type them out. So maybe make notes of questions you want to ask. It gets a little challenging to keep track of which questions were asked. So to introduce our first speaker, Frank Ochoa of the Pivot Boss. He's going to be giving us a presentation on making money with trade sequences. And he's going to explain how to make money with trade sequences, which are powerful blueprints to finding and trading high probability opportunities with skill and clarity. So let me just bring Frank to the forefront here. And thank you so much for joining us today, Frank. I believe I've given you control.
All right, you should be able to hear my voice now, and you should be able to see my screen.
I see your screen and I can hear your voice. So I'm going to mute myself and take it away.
All right, let's go ahead and get started. First of all, I want to say thank you all very much for joining us for this Traders Exclusive webinar event. My name is Frank Ochoa. I am author of the book Secrets of a Pivot Boss, and I run the website Pivot Boss. And today we're going to be discussing making money with trade sequences. And I'm using the PDF right here. And if you want to grab this PDF and follow along right now, you can come over here to this website at pivotboss.com/TE. It's a thank you page here where you can grab the PDF right here and follow along if you like. By clicking that, it'll pop it right up. So let's go ahead and get started with the presentation here. First, trade sequences. This is part of our highly popular training, Swing Trade Pro 2.0. Let's go ahead and get started down here. It's a 5-step swing trading blueprint here. And what we're going to be discussing here are trade sequences, and these are powerful blueprints here. We have several blueprints we use to help us recognize very important days in the market and how to engage them, including identifying each absorption zone, multiple entry points, and even the failure points. And these blueprints are very, very helpful in helping us identify what may come ahead. And as I always say in our trading room, visualization, anticipation, forecasting is all very, very important to kind of seeing how the market may play out, and these blueprints do just that. I'm not going to read this entire slide here, but you have it if you want to read it on your own time. Let's go ahead and get started with some actual blueprints here. So the first one that we're going to discuss here is the Rejection Day Blueprint. And a rejection day, right now we're going to be looking at daily charts, but just know that these patterns can be used in any time frame. So whether it's a daily chart, a weekly chart, 60-minute chart, 15-minute chart, or any other time frame that you may use, we use these blueprints throughout. So while we will be looking at daily charts here, you can just know that these blueprints can be used in any time frame. Now, number one here, the Rejection Day Blueprint is one of my favorites. It's a significant day in the market. You may know it as kind of a tail. There's all kinds of candlestick pattern names that you call it. I call it a wick reversal candlestick or a rejection day. And what's interesting about this here is that, let's see, I was looking to see if I can annotate here. with this pin right there. So what we're looking for is a significant day in the market, something like this, something where you have a major move that swings price dramatically in one direction, taking out prior lows perhaps, and then swinging back up to close very strong for the day. And when that happens, and when you have significant range for that day, it can be a very important day in the market where you can see, you know what, this may lead to a reversal in the opposite direction. And a rejection day has various measurements that we use to automate this type of signal. Number one is the range requirement. Typically speaking, we want a range from high to low to be greater than average daily range. So if the average daily range over the last 10 sessions has been a certain amount, you want at least 125% greater than average to be a very significant day in the market. Now, it doesn't have to be that big for it to be a great rejection day, but that's one of the measurements that we can use to identify that this is indeed a significant range bar. The other thing is the tail. How big is the tail in relation to the body, right? Again, something over 2.5 times the size of the body is typically right, but anything over 2 times can be good, right? It's just a significant tail where a major rejection has occurred. The other consideration that we use here is the close. Where is the day's close in relation to the overall range for the day? And in this case, we look for something where price closes in the upper 35% of the day's range for a bullish case scenario, or perhaps the lower 35% of the day's range in a bearish scenario. That's very important, and we'll discuss why here moving forward. The others are basically the midpoint and where this thing is occurring, so location. The midpoint of the range is basically the high plus the low divided by 2, and that gives you the day's midpoint. We plot the bar's midpoint or the day's midpoint on every single bar because it is so very important in the charts. And what we're looking for is basically an entry that coincides with or thereabouts around that midpoint in the upcoming day. So once you have a significant rejection here, we can then identify high probability entry point as being around the midpoint of that day. Doesn't necessarily have to be exact, but it can be at times. So the next day when it opens up, you will tend to see a pullback into or around that mid. Bulls, responsive bulls come in to defend, and that becomes a great high probability entry opportunity off that zone. So we have the measurements here. We have the key things to look for, and they're all very simple to comprehend and understand. Now, the one thing about this midpoint here is that while it becomes the preferred or ideal entry zone, one thing that we want to make sure is how does price open that next bar, right? The open needs to be above that midpoint in many cases for an opportunity to enter that trade to occur. If, for example, the next day we close here, but the next day we gap down below the midpoint, we wouldn't be looking to enter that trade anymore. So again, we have some if then else rules that we can abide by. Now, what's great about rejection days here is they happen all the time at all different spots in the chart. But while this setup or this pattern can happen often, it's about where it happens, location. It's about where it happens. You know, if this bar happens somewhere in the middle of a compression where it's just kind of chopping around, it doesn't make as much sense to engage that bar as if it were to happen at a major market structure edge, or a composite low volume node, for example, or some sort of, you know, previous month's low. It has to be in an important area for it to develop, and from there it can provide a very good basis for entering that move and then seeing some follow through. So let's go ahead and look at some examples here of how this would tend to work out. So what I'm going to do here is move over to the next one here and go down to the next slide. So this is an actual example here. Some of these examples are a little far back. We'll look at some more current trades as well. But one of the things that we're looking for here is, again, looking at a significant rejection like this. You can see a signal there because we've automated it. And while there was signals all over the chart, right, in different areas, for example, here, this was also in a compression here. It's not as strong. But over here, when this one developed, what you're seeing is that price right there took out multiple month lows there. And then by the time it was done running those downside stops, it ran the other way and closed back above that key level. It was a 160 key level there. And what we're looking for at this point now is that we're looking for a reversal in the opposite direction. Ideally, that low is now in, right? The low is in, it's a strong low. I call it a strong low. And if you have a strong low that you can lean on, then the idea is to find a very good opportunity to enter that trade. And again, I call it the ideal entry zone. The ideal entry zone would be around that midpoint for the next session. So if price were to drop into that point or close to it there, you could look to enter the trade there and then look to see if it can pop higher towards some targets. And so again, when you have a big rejection day, it can be a super, super powerful pattern that can suggest a reversal is coming in the upcoming period of time, maybe the next 1 to 5 days. It could be the next 2 to 3 weeks, or maybe even more, depending on the significance of that rejection. And so again, once you find that major rejection at an important level, the opportunity occurs to enter that trade. When do you do it? When do you get in? Where do you get in? And oftentimes what I'm looking for is sometimes getting in at the end of this day just to be in, and sometimes looking to get in at the beginning of the next session on the morning pullback for a continuation. It just kind of depends on the situation at hand, but there's opportunities for both. So the first entry opportunity may be at the end of the day. Second opportunity would be on the pullback the next day at the absorption zone. And so when we scroll over to the next chart here, what you'll see is the pullback zone, right? So this is the absorption day blueprint. And what we're looking at right here is basically the next day after rejection. So if this is the rejection day, here's your ideal entry zone, right, around the midpoint. And when price opens the day, right, price opened here and it opened above that mid, the morning pullback takes you into the zone here, and that's your trigger zone. And you look to engage the market there and then look for a continuation higher into the close. This is what I call an absorption day blueprint, where after a major rejection, you tend to see that day where it's just kind of building up a little bit. It's building up, it's getting people into the market, and that's where the bus is being filled. This is the bus stop right here, and participants are getting on at the bus stop, and at some point here, you're looking for the bus to get going to the upside, right? So this is the entry the next day. Now, when we talk about the measurements for this one, what we're looking for here is a smaller than average day. So while a rejection day would be a big day, over 125% of ADR, for example, the absorption day would tend to be smaller, something around 75 or less than 75% of average daily range. Additionally, you tend to want the close to be above the rejection day midpoint. And if it drops into the midpoint, it's a buy opportunity. And you need the open, right, to be above that zone, because again, if you have this rejection day and price opens below it, it's already a failure of that point, and you can get a major flush of the downside stops. So this midpoint not only becomes your ideal entry point, but it also becomes your fail-safe to get out of Dodge just in case this thing fails. And we'll look at those examples in some charts down the road as well. So this is your entry day. I call it the absorption day. This is where bulls are absorbing all of the supply down here on the pullback, and they're looking to get things going to the upside. So you have your major rejection day, and then you have your absorption days that come after. And you can tend to have 1 to 3 absorption days, maybe even 4, where it sits there for 1, 2, or 3 days, building that energy, and then the stop run day comes to the upside and you get the move. So this is what the pullback would look like after the next day when it comes into that entry zone. So again, moving forward to the next slide here, and following that same example, you can see the next morning price opens here, which is above the mid, and drops into the midpoint. And we took this trade in the trading room, and I took a screenshot of what it looked like right at that point. Because keep in mind, whenever you have a major rejection and you get into that trade, it's not going to look a certain way, right? It's going to look like a down bar, right? It's going to look weak. You have to get in when it looks weak at that point because it's dropping into that area. But by the end of the day, you're hoping that price closes strong. You're hoping it closes above that mid. So basically, any morning pullback needs to be defended at the CLVN, at the midpoint, and by the end of the day, we may see a continuation higher. And so that's exactly what happens. By the end of the day, you can see over here as we progress forward how the entry point was here, it dropped a little bit more and then shot up by the end of the day. And by 2 or 3 days later, it was up all the way up to the targets, hitting the 180 resistance level that we talked about before. Now, that was a tremendous trade there, but these moves happen quite often in this market, all over. It's about identifying the right rejections at the right zones. And once you do that, identifying where the ideal entry zone is and looking to engage that entry there. Now, one thing about this again is that there are failure points as well, right? If this is your entry and we're looking for this thing to go higher today by the end of the day, but maybe it doesn't. What if it closes below that entry or below that midpoint? If price closes below that rejection day mid, it basically breaks that pattern and I would be out by the end of the day, even if I got in that one day, right? Now, there are some times where I may hold if it closes right at the mid or maybe a couple ticks below, and then we'll get some follow through in our direction. But for the most part, if price closes below your rejection day midpoint, 9 times out of 10, it's going to take out that low of the rejection. So that midpoint is not only the ideal entry point, it also becomes your basis for the trade. If it fails there, then you get out. If it stays above it, you stay in the trade until your targets are reached. We had 2 targets for this one. First one 170, second one 180. And you see the follow through here. But it all started with price breaking through this major support level. Price breaks down hard through that level. But by the end of the day, it was way back above it. It had thrown off a great rejection signal with a great midpoint that coincided with the CLVN, and it gave us a great midpoint retest entry and a continuation higher. So again, very, very good sequence here out of that rejection day blueprint. This is one that we had, and it's not marked up here because we just did this one here in the trading room. This is Snap. So in our trading room, we trade everything: futures, stocks, options, whatever anybody's trading, we're looking at it. If it has great price action, great volume, we're looking at it, right? And in this case, Snap gave us a very, very good pullback. You can see the trending market is up, and right here we get the pullback. This pullback gave us this rejection day right there, okay? Now this is different than that day, right? It's also different than this day, and it's different than this day. I know they have the signals and they look the same, but it's about where they develop. It's about where they develop. And so in this case, this signal developed in what I call the PIMA trigger zone. It's the pivot-based EMAs. And you have the 8-period pivot-based EMA, 21, 34, and 55. And the spot between the 8 and the 24, this zone here is what I call the bullish PIMA trigger zone. And if you have a really good trending market like we do here, any pullback into that zone is your buy the dip opportunity. And then any pullback into the zone becomes your buy the dip opportunity. And any pullback into that zone becomes a buy the dip opportunity. And so when we took this trade the other day, I mentioned to the group that I said, hey, tomorrow is likely going to give us our ideal entry. But just in case it doesn't, because this market has been super, super strong lately, I'm going to get in at the end of this day because there's only, a 20 or 30 tick difference. If there was maybe a 3 or 4 handle difference, then I would have been a little bit more patient. But I got in at the end of this day here with options. I believe I bought the at the money 23s, the August 23 calls. And then the next morning, price did indeed pull back. And look at that perfect midpoint retest entry. And when price pulled back to that zone, I mentioned to our traders, hey, this is the ideal entry. This is the best spot to get in right now. I got in a little early, but again, ideally we would finish higher, and we did. We finished higher. And what we're looking for in this case are high probability targets, right? Entries are one thing, and then identifying great reliable targets is a completely other deal. And what we do here is we have great tools. I believe we have the best tools in the industry here for helping us identify entries, targets, and all kinds of various things. And one of the things we use is this green line here that forecasts these two green lines above. It's what I call the Pivot Boss ADR targets. And ADR is average daily range. And in this case, we're using a daily chart, so it's using average monthly range. And from these lows, which is the pivot low here, we can forecast the average monthly range to the upside. And this would be 75% of average range, and this will be 100% of average range. And you can see how price rallied right to the 75 and eventually went right up to average range for the month and then dropped. And those were basically our two targets. We had a target, actually I like the target at 25 because it was a prior high, but then we had a target up at 27 as well. I didn't quite get filled on the options on the very top there, but did take profits eventually on the second half. But again, being able to identify where to take your profits, again, can be very important, because getting a great entry is one thing, but if you don't take the profits, look how it swings all the way back and wipes you out. So you have to be able to take the profits when the profits are there for the taking. And again, being able to identify those zones is very important. And from that pivot low, we were able to engage that trade. I got in here, other traders may have gotten in here in our room, but we all were able to take advantage of the swing move higher and take that quick 5 to 7 day move. That is exactly how it plays out when you have a great rejection at the right spot, in the right market, and you get a great entry point with minimal adverse excursion and all favorable excursion. And that's what we try to do every single day in the trading room. Sometimes it's easier than others to find great opportunities. You know, right now the market is moving really well in many cases. Lots of great trending structure across the board, especially in tech stocks, and you're seeing this kind of pullback opportunity develop many times. Here's another one we took. This is ATVI. We took this one here recently as well. You can see right here, price rallies and then pulls back into the PIMA trigger zone. You can see the PIMA trigger zone is trending up, and we get this rejection here. Now, we don't get a signal there, but you don't always have to rely on signals if you know that that's a rejection tail, right? This one might not have been as big a range as normal. You can see some of these other ones were much bigger range from high to low. But the fact still remains that that was a rejection tail there. And here's your midpoint retest. You can see the next day price drops into that point. I fill right there. But by the end of the day, it kind of closed right at that level. Maybe it closed a tick or two below the mid. And in many cases, I would get out at that point. But I had just gotten in, and the idea was that this would continue to trend higher into new highs. And I believe in this case, I got the 65 calls here, and we rallied and looked for targets into 70 and 75 and reached both of those targets. The next day, though, was very important. Since we closed below that mid, again, it took a little bit of discretion to stay in that trade, but many times if we close below the mid, I'm out. But in this case, it was right there. We held it. The next morning, we filled the gap right away and never looked back, and were able to take targets again along the way. So those are two trades right there that we took in the trading room that were based off of this rejection day blueprint. This is one of my favorites right here. This takes the rejection day a little bit further by saying, you know, this is a failed new low blueprint. And right now, these are just 1 day blueprints, right? In a moment, we're going to see what I call a trade sequence that stitches all of these different days together to provide a blueprint that you can trade in multiple points. Now, right here, what you'll see is a failed new low is when price drops through the previous session's low. or perhaps 2-day lows or 3-day lows or 5-day lows rather. You know, if you have a very narrow range that trades over 5 days, and then you get a day like this that happens that takes out 5-day lows, but by the end of the day, it's back above those 5-day lows, it's what I call a failed new low. There's also failed new highs, right? I call this a failed new low, and it can slingshot price much, much higher. And oftentimes what we're looking for in a bullish market, if the market's trending up and price is below the previous session's low, in our trading room, what we're looking for oftentimes is a bear trap below the previous session's low. We're wanting price to drop below that low so that we can trap late bears below here and look to squeeze and run the upside stops. That's what we're looking for each and every time. And so every time we see a previous week's low, a previous month's low, or a previous session's low in an uptrending market, we're looking to trap and fade, trap and fade. And that's what this blueprint is all about. There's many points where you can engage this one as an entry point, right? You can be the earliest to trap down here ahead of the formation. You're basically part of the development of that pattern. There's also the ability to get in at the close of that session. And there's also the ability to get in at the midpoint the next day. And that's why I say once you understand the blueprint, you can then visualize all the various entry points that can be had along the way, right? You're not always going to get the best entry. Maybe you miss this one, you're like, I missed that one right there, but I'll get the midpoint the next day. Or maybe it's, hey, this was a great day, I'm going to get in at the close today, and then it explodes overnight and continues higher. So this failed new low is one of my favorites, and it can be explosive depending on the size of this bar and depending on what's happening just prior to that bar. And so oftentimes I bang the table about, hey, I love this setup right here in this stock right now. I think it's going to go huge because of that pattern, and it tends to explode under the right circumstances. So if you look over here, this is one of those times where we had been building out a little bit of a range here, and look at this day right there. That's a failed new low where price drops drastically throughout the session or throughout the morning and took out 1-day lows, 2-day lows, 3-day lows, and was working on moving even lower, but by the end of the day had reversed course to close higher. That's tremendous. When you run the downside stops like that of all these participants and then you get a huge reversal, what tends to happen next is a major continuation that can tend to get a big rally ahead. So what we're looking for in this scenario is for any pullback as deep as this to get in. But sometimes when you have a major rejection like this, I'll get in at the end of the day just in case so I don't miss out on that move. Other times, you can also split your entry. You can say, I'll add half here, and if it pulls back to the midpoint, I'll add back half here, and now I have a full position. And that way you're getting some here just in case. You can average in on the way down, and then you can watch the thing move higher. Again, this is your exit as well. So if price were to have closed below that dot the next day, the trade's done, right? So now if we move forward again, you'll see how this plays out. Again, this is the next morning. It gapped down a bit and dropped into the midpoint. And this, again, is not the full bars day. This is kind of a snapshot of what it looked like that morning when it dropped. And again, provided an entry right there, right at the PIMA trigger zone, or rather the midpoint trigger zone, and then started to pop, right? This is a developing bar because this is what it looked like after it bounced. And then by the end of the day, you can see how this thing had rallied, right? By the end of the day, there's your midpoint. Your midpoint's right here. It dropped into it. Anybody who got in below the midpoint got trapped. They were the first to start the squeeze. And look at this major move that continued the next day. Just tremendous how it just exploded higher and again got to our profit targets. And in 2 days, that was all she wrote. Just a huge, huge move off of that failed new low. Again, one of my favorites is a failed new low. This also is a rejection day looking candle, but a rejection day to me would be kind of at an edge like this, where it's drop, 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 boom, rejection day. Okay, bounce. Drop, 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 boom, rejection day, and bounce, right? And so when you look over here, you'll see a trade sequence develop on this side where you have this rejection day, absorption day, look at that midpoint retest. That's a failed new low. This is a midpoint retest. That's a stop run day and your continuation to the targets. That is a perfect rejection day trade sequence. And again, various bars and knowing what to look for. So if price never reached your midpoint the next day and it sits there for 2 days, you're like, okay, if it gets below 2-day lows, that could be our time to trap, and ideally we'll squeeze by the end of the day. And that led to a big move up. Over here, again, rejection day, you get the pullback. Doesn't quite get as low as that mid. It won't always get to the mid, especially if you have a huge high range day, right? If you have a huge high range day, then maybe it gets to the top of the pivot range the next day or something like that. But anything below the previous close is an opportunity to buy cheaper ahead of what could be a squeeze. So again, very, very good the way this played out. Failed new low here, failed new low there. Again, we took this trade here and it turned out tremendously. Let's go on to the next slide here. This is AEE. This one is from recently in the trading room. I just took this screenshot today or yesterday. Again, started with a rejection day here, midpoint entry, and continuation. This is a failed new low right there. So price drops, 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 and takes out 1 day, 2 day, 3 day, and 4 day lows. Additionally, 4 day lows, this was 4 day lows of a narrow 4 day range. Very, very narrow 4 day range there. And then we took out those lows, but by the end of the day, we closed strong. So I always say you don't have to anticipate what a bar is going to look like at the end of the day. Sometimes just let it happen. Let the rejection do its thing. And by the end of the day, if the rejection has held, you can look to enter at the end of that day, or you can look to get the better entry on the morning pullback the next day. In this case, I told our crew, when you get a failed new low, oftentimes I like to get in at the end of the day because you may not get that pullback. A failed new low is almost like it's a spring ready to just explode higher. It's coiled up spring, and as soon as it gets pushed down, it's ready to explode the other way. So oftentimes you won't get that pullback the next day. So oftentimes getting in at the end of the day is a good idea here. But again, sometimes patience pays off by waiting for that pullback. Great continuation and a move higher. And again, that's just from the current market here. And that was one of our signals in our trading room. I believe that was a Friday, or was this a Thursday? So that was here recently. Let's go to the next one here. Now, this is what I call the rejection day sequence. A sequence is a collection of these blueprints kind of stitched together so that you get a sequence of different entry points and also failure points, right? So in this case, what you're looking at is your rejection day. It starts off with a sharp rejection day. Big rejection day. Took out 2-day lows. By the end was closed higher. And now you have yourself an ideal entry zone here. That's the midpoint. So now you have 2 absorption days here where it can sit there for a couple of days, just like we saw in that last example, right? It sat there for a couple of days before it did anything because it's absorbing right there. Bulls are absorbing supply. And then over here, this started off with a failed low. Price drops below those 2-day lows, but then starts to fade back above and reclaim those prices back above those lows. And that sets off a continuation higher. This is what I would call a stop run day, where you have the midpoint that is at or beyond the breakout point for the day. So half the day's range is below it and half the day's range is above it. That's a very, very powerful day. That's a blueprint in and of itself. And what we do off of a blueprint like that is we say, okay, if that's the breakout point, then obviously on the pullback the next day, we need to hold that breakout and midpoint in order to continue higher. So that becomes an additional entry point. So you have multiple entry points here that you can do off of one of these rejection day blueprints. which is basically you can enter at the end of this day, you can enter at the midpoint of this day, you can look to trap below at this zone and look to fade. You can look to defend the pullback after breakout. And again, all of those provide great opportunities to get going to the upside. And many times when a move develops, you're seeing an entire sequence play out in this manner. And being able to understand the sequence, being able to understand where those entry points are, where you're wrong, where the targets are, is all a piece of the puzzle that we put together with these blueprints. So let's take a look at a blueprint right here. This is Macy's, and you'll see right here, we had a blueprint right there where you had a major rejection day. It took out 2-day lows and closed higher. There's your midpoint retest. Here's your stop run day through those highs. Here's your midpoint and pull back to the breakout point and look at the continuation higher. Just tremendous. Over here, nice pullback. You have a major CLVN to lean on right there. That's a composite low volume node in the volume profile. That's major support. As you can see, where it bounces here, bounces there, bounces here, and now we're looking for another bounce here. Starts off with a major rejection day. So the first entry opportunity would be at the end of the day if you wanted to, or you can look to get in at or around the midpoint the next day. Again, it's not always a perfect midpoint, but sometimes it can be. It's thereabouts, right? The markets are not super precise all the time, but they can be. It's incredible how they can be super precise with some of the tools we use. Here's the next day right here, where price pulls back and again gets you right into that midpoint zone, ideal entry zone, and bounces and closes higher for the day. That's all you want to see, because if you can get that good minimal adverse entry right there where you get into the trade, you experience minimal adverse excursion, and then you close higher, again, that's what you're looking for. And now you can look for this thing to continue higher over time. So what we're looking for here, again, is for more upside. But more upside doesn't always happen right away, right? It doesn't always happen right away. Instead, what you see is price went up here, gapped up, and then filled. And the next day after that, it dropped pretty hard, but it always stayed above the midpoint. As long as it stays above here, I will stay in that trade. As long as it stays above there by the end of the day. So if it closes below it by the end of the day, I'll be out. But if it stays above it, we're in. And what I like to see is additional rejections that come along the way. So this is the initial rejection. Here's a great midpoint retest. And then price drops and gets a failed new low. And that failed new low could be the extra juice that we need to get this thing going higher. And so when we scroll to the next chart here, you can see that by the end of the day, that failed new low had closed strong. And then earnings took this thing up to our final targets. Again, started with a rejection day, midpoint retest, failed new low, explosive up move, and you look to take your profits. The other thing is choosing reliable targets, being able to identify reliable targets from the low of the day. On that day, we can forecast higher average monthly range, and there's our target zone, 75% of monthly range. That's what I call our primary target. 100% of average range, that's our secondary target. Incredible move, got both of them that day, all with very minimal adverse excursion. Very good. Now, you can see right here, work. This is one that we did here just recently. This one had a very narrow range day on the $30 support level and pushed higher on a stop run day. So that's a stop run day blueprint. The next day that followed was a very deep pullback followed by a rejection back up. And again, what we saw here was, okay, there's an opportunity to get in at the end of the day here, or if you're patient, wait for a pullback the next morning. I was part of the crew that was patient. We got the low tick basically on the pullback. I don't even know what the entry was, but it was lucky to be filled because it didn't come back to that level after that. And we had two upside targets, 36 and 38. And so when price, we got it that entry here, the next morning price exploded to the upside. and filled the 36s, but then started to drop significantly. We never know how markets are going to react. You just have to be on guard and understand that anytime you're breaking to a new high, there's always the potential for failure. There's always the potential for failure and rejection. So in this case, when we saw price start to break back below 35s, we took last off right there and still made a profit. And again, it was because we were able to identify and pinpoint a great entry after a great rejection sequence. And then we were able to pinpoint where targets could be in order to take profits. So we were able to take half here, and then when price started to drop, took the last half with smaller gains. But it was good. It was a good trade, made money, and now you're starting to see another rejection develop here. What you'll see again is a theme where this just continues to happen time and time again. But there is also those times where it fails. There's also those times where it fails, where you have a great rejection sequence that's developing. Here's a great rejection. You see absorption, absorption, absorption off the zone where you should be entering, but then it doesn't go higher. It can't go higher. It looks like the bus is too full here. And then up here, you start to see a failed breakout. Price pushes through those highs, right? But then starts to fail. And that's your first thing. Anytime you're breaking out, I'm always watching, is it going to fail at that high? Because if so, we could easily turn around and smash the other way. And in this case over here, what we're seeing is a failure through that absorption zone. So think about it this way. You have a great rejection day, and now you're long from here, and everyone else is long from here, and they're long from there. Where are your stops? The stops are generally below those lows, and below the low of this level here. And so if it's going to fail there, it's going to trigger those downside sell stops, and here it goes to flush. A big, big continuation. This is a failed absorption sequence where you're absorbing here, but it fails. And once that happens, there's a major continuation that can happen. I call the next day a retest after stop run. So all the stops were run here. The next day, price retests the breakdown point, and that can be your entry for a continuation downward the next day. So that's why that midpoint is very, very important. If we, again, move over to the next slide here, you'll see how this plays out. This is IYT. I was in this trade, right? A great rejection here. We're looking at the absorption zone there. Everything looks good, right? We've broken through multiple day lows. There is a bit of a rounded behavior here, but ideally, if you're going to reject like we are here off these lows and close above it, you're looking for the midpoint retest and you're looking for a continuation higher, right? That's the idea here. Instead, this thing starts to fail, right? And it's right off the midpoint. You can see the next day was an entry point. I was in there and we were up. Wasn't the strongest, but the next day, it opened with a gap down and then closed below that midpoint. And I know it's very tempting to say, I'm going to hold on to this trade. I'm going to hold on because it just barely closed below it. But I tell my group time and time again, if it closes below a significant rejection day midpoint, 9 times out of 10, it will fail. And if it fails, it will take out the low. This one closed below it. I closed the trade, small loss. And then look what happens. Look what happens. The next day, it rallies, failed high, and then crushes to the downside and takes out the low. Crushes to the downside and takes out the low. That is a failed absorption sequence right there, where you have a great rejection day sequence, but it can't hold the mid. If it can't hold the mid, it's going to take that low out. And not only will it take the low out, oftentimes you'll see a major continuation downward. That's why it's just safest and easiest to take the small loss than it is to hope and hope and hope as it just gets crushed, because it tried. Bulls were trying and now they failed, and you can see the floodgates that open, right? So instead of holding on for dear life here when it closed below the mid, instead say, you know what, this thing's about to go to these lows. So instead, what I'm going to look for is a failed high, or perhaps I'm going to look for a midpoint retest entry the next day, or whatever the case is, right? And from there, again, you can look to engage that to any targets that you may have. But again, this is what happens when it fails off the mid. That's why the midpoint is so very important. So that pretty much does it there on that. I did want to bring over the NQ here really quickly and see if I can show this screen. Oh, did I accidentally take that off there?
I can see your screen still, Frank.
Okay, I was looking to see if I can show a different, okay. Well, I was gonna bring up the actual chart for the NQ right now, which actually has a rejection sequence that's developing with a midpoint retest right now in the daily time frame, and that's something we've been following in our trading room and was part of our analysis this morning as well.
You probably have to reshare that. Like, did you just share your application?
Here, I
We
trying
do
to
have a
do
couple of questions for you as well.
awesome. Okay, well, I'll just leave it at that then right there. But the it's happening live right now. If you look at the daily chart of the NQ, another rejection yesterday, midpoint retest today, and now we're bouncing higher, and that could lead to another round of movement ups to the upside unless we can't hold that midpoint from yesterday, which is 10.525. So that's something to look at in your charts. Again, if you go over here to pivotboss.com /TE, you have that PDF right there. I do have some questions I want to answer right now, but as well, I'd like for you to come to this site here to get that PDF. You can, I know I breeze through a lot of these charts because there's so much information on those charts that we put for our traders as part of their training. And I also have some great deals here that you can take a look at. I am author of the book, Secrets of a Pivot Boss. It's a fantastic book that has had worldwide acclaim from traders all over the world. I still get so many traders that are so grateful for finding and happening upon this book, which makes me super happy day over day. You can get this book on my website for $69, or you can also grab it right now for $40 right here, ebook or hard copy. Additionally, if you like the training we were talking about right now, this is the full program right here, Swing Trade Pro 2.0. It's usually $697, 20% discount for you all. That makes it $556. It comes with a 135-page Swing Trade Pro 2.0 PDF, which has all of these examples, including all the other sections we talk about. It has all the 9 blueprints we talk about. It has all the various options trading strategies that we use and all other types of manner of things. You can check that out as well. And lastly, if you want to join our trading room, this is fantastic as well. You can get the first month for half off. Instead of $99 a month, you can get $49.50 to jump into our trading room. You can click this link right here to register. In addition to this trading room here, you also get our proprietary indicators and tools as part of jumping into our trading room. So that Pivot Boss ADR targets indicator I talked about is yours. We have Pivot Boss pivots, Pivot Boss bands. It's just incredible. And we have just phenomenal traders in that room from all over the world with lots of experience, and it's a great community where you can engage. Let's see, we have some questions coming through.
Yeah, they just need to go to pivotboss.com /TE and scroll down to get the book. Well, I want you to go back a little bit. I think I put one to you.
Looking here.
Please let us know PIMA -51321 or 82134 was the very first question.
Oh,
and then we've only got a couple of minutes because we got our next speaker in the wings.
That's right. So PIMA is the pivot-based EMAs, and again, the 51321 would be a very fast. So those are the actual periodicities. 51321 would be very fast. What I use is an 821, and that's 82134, but usually it's between the 8 and the 21 that I really like. The 8 period average right now I feel like is a golden average. That's why in my charts it's usually yellow or gold. Anytime you have a very strong trending market, if price drops below that 8 period average, it tends to be a phenomenal buy the dip opportunity. Especially again inside that 8 and 21 zone. You typically don't want price closing below the 21 in a trending market. So yeah, that's a great question. I usually use the 8 and 21 as the PIMA trigger zone in a bullish trending market or a bearish trending market.
We also had someone saying, did you think about reversing positions at that point? And I think that was at 141. So it was right at the end that they're
Oh,
asking about you reversing positions.
that's right. And that's the point of that stop run bar as well. If you're wrong at the midpoint and say you got out, and if there's going to be a stop run through that midpoint, then absolutely you can reverse positions and go short the other way. Absolutely. Because what's happening there is the bus got full of people, and then it just got too heavy and couldn't go. And so that's why the thing went the other way. And so that is always a great if and that's one thing also, if the market has had a great rejection, but it just isn't going for 1, 2, 3, 4, 5 days, it's sitting there and it can't go, then that's probably a sign that it's about to go the other way. Great question.
Awesome. You know what? There are several other questions there, but I'm going to ask everybody to email you their question because we do have to keep on the schedule. And I'm at
Absolutely.
1:48 my time, which is 12:48. Well, actually, our next speaker is in California, so she's 3 hours behind me, 2 hours behind you guys. So anyway, everybody, just go to that website, pivotboss.com/TE/. And from there, you can get in touch with Frank to get those questions answered. It's and Frank, what is your email? Do you want it right to you or do you want it to go to a different email?
You can go to frank@pivotboss.com.
All right,
And
cool.
and you can also sign up free at Frank at pivotboss.ecofin.co, which you'll see as well down here. And that's a free sign up to come in and jump into a room and DM me as well.
Awesome. Okay. So thank you so much, Frank. That was fantastic. I know everybody appreciated that and got a lot from it. I really would love to have you back again in the next few months too. This was great. So thank you.
Thank you so much for having me. Everyone take care.
Thank you. Bye-bye. And now I'm going to bring in Dr. Julie Manz. She's going to be talking to us about mind over markets, psychology you need to trade successfully. And in her interactive session, she distills her decades of personal experience and the lessons learned in working with her income trading mastermind students to encapsulate the elements involved in successfully trading for daily income. So let me just give the screen over to Julie, and let's make sure that she is unmuted. There she is. Julie, are you with us? Can you hear? Can we hear you? I see mind over markets.
Have you got it?
Yes, and let's see, you may need to turn your mic up just a teeny bit.
Okay, is this better? Let's see.
Yes, excellent. Thank you for joining us.
Well, thank you for having me. This is a lot of fun, so I look forward to sharing with you guys today.
Awesome. Well, take it away. I'll just mute myself and we'll let you get on with your presentation.
All right, thanks so much. So we're shifting gears a little bit. I know you just had a strategy session, and that's always one of the fun things about trading. We're going to take a break here and talk about the psychology of trading. This is one of our series. It's called Mind Over Markets, and today I was going to talk to you about opportunity. When I say we, this is us. This is me and Adrian. You probably know Adrian. We're the dynamic duo of TraderInsightcom. We have been on the scene for at least 20 years. We started trading in 1997 when this thing was brand new, and you can imagine how much excitement there was. We were just getting out of graduate school, and we said, hey, you know, have you heard about this thing? And we just started to hop in and get involved. Adrian's been mentoring since '99, and where, you know, we'd go to these conferences and they would just pair him up with some folks. And he came up with trading plans, things that made sense for him, and people kept asking, what are they? What are they? So we've had trading plans for almost this entire 2 decades. I can't believe how long it's been. And there is, excuse me, on our site, even the results for the past 16 years of trades he's planned the night before and the results of those the next day, which is pretty rare, I think, in this industry, but we've been doing this a long time. The cool thing is we have these mastermind students now, and I think this has only been 8 or 9 years, but again, it's I can't believe it's been that long, but we've had a lot of fun teaching adults and doing presentations. There's books and articles, and every morning we have a trading room for our style of trading. This presentation is not about any style of trading. So no matter what you're doing, psychology applies to all of us as traders, right? So we have, for our style of intraday trading, we have our first hour trading room. And so we're very busy trading, and that's my street creds for trading. But I'm also a social psychologist, and I've been a professional researcher and a professor at university. So both of us have PhDs. Both of us have done that. So we know our adult learners. I thought real quick I would show you some of our adult learners, because we're going to talk about psychology. And the reason I'm bringing these folks into it, this is from one of our we have a year-long program that has a boot camp, an intensive boot camp at the end, and this is from that last year. We have been temporarily interrupted, but hopefully in October we're going to continue on with that. But each one of these people has their own psychology, and that's really what I want to show you here. We've gotten to know and enjoy and love doing these programs and get to know people, but every one of these people here has their own challenges with trading psychology and their own remedies that would work well for them. And that's important because I want you guys to all you folks to realize that every one of you is unique in what your challenge might be, even though they might look similar. Okay, so as a social psychologist, that's sort of the general practitioner of psychology. It might surprise you to know that most psychology is not abnormal psychology. We have friends in movie and television writing, and they all like to use abnormal psychology to make stories exciting, but most psychology is about studying how groups of behavior interact or individuals interact with other individuals or situations. So this is a take on that, just a visual for that parable. And to say that psychology itself has different approaches and is very good. Many of these approaches are good at describing specific human behavior, and not any one of them is good at describing all of them. Much like if you were blindfolded and needed to describe an elephant, if you'd never seen such an unusual thing, you might be at one point saying, oh, it's like a wall, it's a side, or the other point at the tusk, oh, it's a spear, and you would be right. The other person would also be right. So the important thing when you're looking at any psychology courses or books or blogs is to know that everyone's going to have their approach, and they're not wrong. They just are going to be different, and their different ones are going to appeal to different people. So here I have a wheel of, let's say, 7 different psychological approaches that you might have read about. So, or maybe even had some coaching in or something. So these are different approaches in psychology. And you can see that the humanistic approach is more recently would be mindfulness. And I happen to like mindfulness, and getting you centered in where you are in the trade, and getting you centered in letting other thoughts go. And that can be very useful for some people. Other coaches swear by, a psychodynamic thing where if you don't go back to your childhood and talk about what the basis of your anxiety is, they think that you're never going to be successful, because that's the thing that's going to be important. I could recommend behavioral therapy, but behavioral strategies for some traders. Put a rubber band on your wrist and snap it every time you're in a trade. Snap it when you're out of a trade. That's for short-term traders, right? Just to keep you online, and that might work for some people and not at all for others. Cognitive strategies are things that people love to talk about. Cognitive approaches explain so much of trading behavior. They don't offer a lot of remedies for it. So anyway, just to say, as you look out over the sea of psychology when you're consuming it, keep that in mind, and that might help you try and figure out which pieces of it make most sense for you. All right, so now the next best thing I want to talk about, and this is from a course that I was doing for people new to intraday trading, but I think it's relevant for all of us doing any kind of trading in any market, and whether we've traded a long time or not. The business of trading is very convoluted, and I have broken it out into these 4 sections that I think are involved in every sort of online trading. So technology, information, psychology, and strategy tips. So if you had boxes, the psychology box would be a big box, and you would put the other 3 boxes inside there. But for instance, technology, it's online trading. You're going to have hardware, software, internet, a broker. You're going to have to be able to operate those things. And it's helpful to know, for instance, we have some students that are following a discipline, they have a plan, they know what they're going to do, and they have fumbly fingers. Well, that's a whole different remedy than trying to tinker inside someone's head. That's just, wow, let's get some hotkeys or something else. So if you can pull that apart, information, I'm talking about specific to whatever it is you trade. So say you do options on the oil stocks, you're going to need to know about the oil services industry. You're going to need to know what OPEC's doing. You're going to need to know a bunch of specific things, and also sort of general things about the market and how the market, how it functions. Psychology, obviously, we're here to talk about, and strategy is what we all want to talk about. That's what Adrian talks about all the time. Of course, we are heavy on strategy at Trader Insight, like most places are, and we have a strategy for that, right? There's an app for that. We have a strategy for that. And they've developed over time, and they've developed for Adrian, right? He's developing them, so they suit his psychology, and then the folks who come and work with us, it suits their psychology for the type of trading that we're doing. But no matter what you're going to do, right, in your trading, whatever kind of trading you're doing, you're going to have a strategy. So anyway, that's one exercise you can do, is trying to put your business into these boxes and try and figure out, if you're having challenges, is it in any one of these things that you can sort of pull apart, and it isn't necessarily just psychology. Psychology is the big box, of course, because the only thing you're bringing to your computer every day is you, right? So you're going to be there. So that's why everyone focuses on, you've got to be able to be centered about things. Now, there's all common things, and I put the list here, common challenges that we have, and I have a very simple solution for all of these common challenges, whether you're cutting your winning trade or letting your losers go, or waiting for that home run, shooting off trades when you shouldn't be shooting off trades, all those things. Here's my answer. Have a plan. So that's, I know you're sitting there saying this is so boring, and I know this, and I can't stand it, but you have to have a plan. If you don't know in a very specific plan, right? You can't just reach into the river and pull out a fish. And if you don't have a plan for it, you can't know, is your plan even working? So before we can talk about specific psychology or challenges, you really need to have a plan so that you can see where you're having troubles. And if you don't have a plan, that's a different psychology, right? That's something where you need to start there. No matter what you're doing, right? Currencies or crypto or anything, there's got to be a plan, or you're just shooting darts. And once you have a plan, it has to have really clear criteria. So, we have plans. Like I say, we have a plan for that. So some of our plans are from the night before. So you can set them up for that day. There's sort of intraday swings in our case. And there is, for each one of these things, a trigger price, and we know what the event is that triggers it. We're trappers, so Adrian's plans are all set up to let the stocks come to us. Other people are hunters, but no matter which way you go, even if you're a momentum hunter, then there's got to be a trigger, and you've got to be able to clearly identify that. Is it a pullback? Is it a breakout? Is it, whatever it is, make sure you know what it is. And then you have to have 2 exits, your stop loss and your target. And if you don't have these things clearly defined, you're not going to know what your reward to risk ratio is. Now, we do have some strategies where the individual trade might be upside down. The stop might be larger than our expected target, but it's a high probability trade. And so overall, it's got a proper reward to risk ratio as a strategy. So have a plan, and then also you have to log your trades and strategies. And again, I know this is boring, but it's it's so real. And if you look at what you're trading now and you think, I don't even know why I'm doing what I'm doing. Okay, that's probably not likely. You're probably here because you do have a plan, but it always helps to go back through these. Adrian wrote the books and has courses because all of that helps him more clearly define what his plan is. And I would really encourage all of you to make yourself a course on record yourself as a course on YouTube, or for what you're doing, as if you were going to explain it to somebody else. So then you can really tease out what it is that you do and what you're looking for. And sometimes it's surprising. You'll find things that are very strong and things that might need some improving on the whole thing. So my very first psychological tip is you have to have a plan, and you have to trade according to your plan. And it's going to take care of a lot of problems if you just stick to your plan. All right, now this is almost like we're going to get to opportunity. This is almost just like a title slide, because I think that it is so important. This whole business is finding opportunity. That's what you're here for. Now, when you look into finding opportunity in psychology, what that means is it involves a choice, right? You're always going to choose. So having a choice might mean you don't like the outcome. So of course, there's one way that goes that you're following your plan, you show up, you follow your plan, and it goes the way you want it to, and you're feeling great. And then you move on to the next trade. That's good. Sometimes, and we're not going to go into this today, that leads to this winner's problem and you take your profits earlier, but that's a different story. Let's just assume you're following your plan, you go to your profit target, and that's a good thing. Okay, let's go the other way. You follow your plan and you end up regretting that you didn't make the target further because it went further, or you end up feeling badly because you were stopped out of the trade. Having a plan tends to help with this, but just by the nature of having a choice, you are subject to regret or disappointment. And those two things are not the same thing, by the way. So the takeaway from here is going to be why it's important to be regretful and not disappointed. So let's move on. Let's have a look at why it matters where you focus. So the focus of regret is on your personal choice. And the important part about that is you can modify that as you go forward. The focus of disappointment is more dispositional. You're focusing on the outcome, and then that's starting to make you feel bad about you. So again, when you're regretting something, you're focusing on your choice. And when you're disappointed, you're focusing on, oh, I lost money, or a lot of times, oh, I didn't make as much money as I wanted to make. So again, the downside, there is a downside of regret, and that can be that you pass on an opportunity, or rather, if you pass on the first opportunity, you're likely to pass also on the next opportunity. That's kind of an interesting find, and I thought, wow, I sort of ran through our own trades and by some of our traders, and they're like, yeah, I am less likely to take the second one if I didn't take the first one. So I'm going to show you a trade like that. And that's a good thing to know. It's a good thing to know that that's out there, and that's something our brains like to do. It's a shortcut for our brains. The downside to disappointment is if you brood over the outcome, it gives you a negative mindset over time. And the more you brood on this, the more you think about how disappointed you are, the worse you're going to feel. And the worse you feel makes you a worse and worse trader. So the best traders actually have a positive outlook on life and a positive sense of the market. The upside of regret is you can learn, because if you're focused on your choices and what choices you make, you can learn from those and go forward. And of course, there's no upside to disappointment, because like I say, the worse you feel about yourself, you're just going to keep going down that road. So the implication for this is that when you feel negatively about a trade, whether it's that it went in your direction, but you didn't catch all of it, or it didn't go in your direction, you can shift your focus to how you're going to change that in the future. Oh, maybe I didn't set the target wide enough. And the important thing is to let it go. Also, the implication is obviously shift to what you can do about it, not how disappointed you are. But even if you are disappointed about the outcome, and that's human nature, I mean, nobody's happy about losing money, but you also have to just let it go. So when you see opportunity, you just understand that there's always going to be this possibility. Every trade you enter, there's a possibility that it's not going to go the way you want it to go, and you're going to have either regret or disappointment. And the faster you can turn it into regret, and then the faster you can turn that regret into a learning experience that you can then let go, take a note of it, and then let it go, the faster you can, the more you can recover and get into the next trades and the next opportunity. We trade intraday, so that tends to be, milliseconds, and you have to work on letting things go pretty quickly. When you're doing day over day, you might have a little more time to ruminate about that. Here's a trade in Apple from yesterday. So what you can see to the left, down at the bottom, is market time. So 9:30 is when the market opened on that first up arrow. All that is pre-market, and we set some levels on these high-flying NASDAQ stocks both the night before, and then during the morning we look at the pre-market and see how they're interacting with that. So the bottom blue line is that 378.54 is the bottom of that pre-market. A lot of times this particular strategy has a bounce. We like to call it an apple a day, and a lot of times Apple behaves in this certain way. If it opens, it pulls back, and then it bounces typically to the long side. If you miss that first trade, you're less likely, social research will tell you that you are less likely to actually go and take that next trade. The next trade, our next favorite thing, is that green line at the bottom is your support 1 pivot, and the red line at the top is your central pivot. We love a trade off a pivot. But if you don't take that first trade, already your brain is working and saying, oh, I didn't take that good opportunity. Now this opportunity might just fly back down. And then there's another opportunity later when it also bounces against the lowest blue line, which is our levels, and you're less likely to take that. So the idea being, what you need to do, of course, is try and let that first one go as soon as possible, and just let it be a regret and let it go. Say, oh, next time I'm taking that trade. Also, as I said earlier, were you just tired? I mean, we are on the West Coast. It's 6:30 in the morning when the market opens for us. Did you just happen to miss it? It's important to get a hold of your brain, grab a hold of your brain, and get it focused on what your plan is and what you're supposed to be doing. And if you didn't do the first one, since you already now know that you're unlikely to do the next one, force yourself to do that next trade. All right, so now I think it would be fun to see, these are some characteristics that when you do a search for psychology in traders and which are the most successful traders, these are 5 of the things that are come up again and again and again for people who are successful traders who make their way forward. And I would say in working with the people we do work with, this is true of those who end up making really good traders and making decisions that work for them and enhance their success. Flexible thinking, pragmatic, and by pragmatic you can be too pragmatic, but this is a nice middle sense of pragmatism. Being self-aware. Research also shows that the most self-aware traders are also aware of other traders and what they're doing, and can shift and be flexible, going back to the first one, and modify those trades in a way along with their plan, right? But modify the trades so that they take into account what they're doing, where their awareness is, and also what other traders are doing in the market, just watching price action. Obviously self-motivated, which is, this is a entrepreneurial endeavor here. So all of us, I think, could say we're self-motivated. But positive outlook is very surprising to a lot of people. They have a hard time understanding that being positive is actually part of being successful in this business. And this is really fun. So when we are looking at those wedges in the pie wheel, the part that is biology, there's a whole bunch of research going on now, and you might have read some of it too, on neuroplasticity. And it's so interesting that they've found, no matter what your age is, that with experience and practice, your neural connections you can either grow new connections in your brain, strengthen the ones that exist, and also they're building insulation to speed the transmission. So an example might be if you're a piano player, then they find those neural clusters get bigger and thicker in the area of the brain that is storing the piano connections. So same thing with trading. You can learn to not only think differently, but also react differently to trades, but it takes some time and effort. We recommend we have a simulator. We are all about simulators, and we use Trading Sim, and then we think those guys are great. So we can practice these high-flying NASDAQ trades, or we have a gap trade that's a really nice fade with statistical boundaries around it. So it's sort of a proprietary thing, but not a black box thing. And we find that practicing those over time makes you better and better. So it's not just fumbly fingers, it's also your brain sees it faster and you respond faster. So never be afraid to keep practicing your craft, no matter what it is, and learning about it and working on it, because your brain is actively involved to make that happen better, faster, sort of like a $6 million man. Okay, so the takeaway from that is you can get smart. You get smarter through hard work, effective strategies, and getting help from others. That's the growth mindset. So a growth mindset is also a positive mindset, and that's with research on kids. What they found is kids who believe they can increase their intelligence actually can increase their intelligence. And this kind of goes along with the positive attitude. You have to have a positive attitude to trade well, and you have to believe that you can go ahead and be smarter to actually get smarter with that. So I thought what would be kind of fun, since I told you this would be interactive, would be to go through, there's a little 8-point quiz that we can go through, and you can take some notes and you can find out if you do have a growth mindset. And there's just a disagree and agree, and all I need you to do is write down the number, number 1, D or A, right? Number 1, disagree or agree. So here's the first question. There's only 8 of these. The first one is, no matter how much intelligence you have, you can always change it a good deal. Do you disagree or agree? So for number 1, no matter how much intelligence you have, you can always change it a good deal. Agree or disagree? Okay, number 2, you can learn new things, but you cannot really change your basic level of intelligence. So you either disagree or agree for number 2. You can learn new things, but cannot really change your basic level of intelligence. Number 3, I like my work best when it makes me think hard. I like my work best when it makes me think hard. Agree or disagree? I like my work best when I can do it really well without too much trouble. I like my work best when I can do it really well without too much trouble. Halfway there. I like work that I'll learn from even if I make a lot of mistakes. So number 5, I like work that I'll learn from even if I make a lot of mistakes. Number 6, I like my work best when I can do it perfectly without any mistakes. I like my work best when I can do it perfectly without any mistakes. Number 6. Number 7, when something is hard, it just makes me want to work more on it, not less. Agree or disagree? Something's hard, I want to work on it more, not less. And finally, to tell the truth, when I work hard, it makes me feel as though I'm not very smart. Tell the truth, when I work hard, it makes me feel as though I'm not very smart. Okay, agree or disagree? So now what you're going to do is look at those and count how many for the odd number how many you agree with odd, and for the even numbers, how many agree with even. And tally those up. And the odds have it. So if you understand, you can increase if you pick the odds, you do have a growth mindset, or if you agree with more of the odds than the evens. So you understand you can increase your intelligence by learning. You're not afraid of a challenge. You believe working hard is the best way to learn, and you're willing to make mistakes along the way. So anyway, that's where we are. That's what I'm working on. It's a pretty fast presentation today. I can go back over any of that anybody wants to do. I guess I had a whole lot more I was going to add in, and I didn't want to go over. But I am going to be, we are both working on putting together a whole psychology division of Trader Insight. We both are psychologists by the, in fact, so we might as well be the ones doing that. And we are doing a bunch of assessments. If you want to have a bunch of free assessments just to get to know yourself about and what you're about, and we have a whole bunch of different dimensions that we're looking at, so people can start to get, the more you know yourself, the more you're able to be able to see where your challenges are and to get closer and closer to being, a better and better, the perfect trader, right? I think that's a journey and maybe not a destination, but it's at least we're all on that journey. So you can text this to just text psych, PSYCH, to that number there. It's it'll give you a responder, and then we will get you out a battery of assessments probably over the weekend, and then you will either self-assess. They're anonymous such that we're not sharing that information, and we don't know you in either. So they're anonymous to the amount, to the degree you want it to be anonymous. If you want to talk to us about them, we're happy to do that too. I talked a lot about some of the strategies Adrian has, so you're also going to get a PDF of some of those strategies, and you can have access to our first hour trading pit and the NASDAQ scalpers I talked about, as well as the around the horn plan that has the entries and triggers. It's probably worth it if you're thinking about your trading plan and you're not sure how you want to set it up. And again, I realize not everyone here is trading intraday. You've got all different things you're doing, but it's kind of a really nice site to go and look around and see how we do it. How after 20 years you stay pulled together by having trading plans and doing them robotically and efficiently every day. So we have spreadsheets that I think you could find really helpful, as well as the structure of the trading plans can be really great. So that's really what I have for you guys today. I don't know if there's any questions or if there's anyone who wants to talk more about this. I'm happy to do that.
All right, everyone who has questions for Dr. Julie, please do type them in now. That was awesome. Thank you.
I'm sorry that went so fast. I was so afraid of going over. I think I hurried through some of this.
You never know. Now, I did assign a couple things to you. You had some fans speaking out and welcoming you and giving you kudos for a great presentation.
We love our guys.
Now, the best way for them to reach you is to text to 310-299-9148. Or do you also have this set up as a landing page they could go to? Or an email?
You can come to TraderInsight.com. You can always email me directly, just Julie@TraderInsight.com. I suppose I should have that up there. We're not really big. We're not really big on sales. We're not really good at it, as you can see. All of this is just for people to come in and look around. We really are only interested in working with people if their psychology fits with our psychology, and we welcome them to come look around and see if that's the case. So really, this is just sort of an introduction, and people can nose around and see what's going on and see if this is something that works for them. But with the psychology, if they do text psych to that, we're not going to call you or anything with, we might ask you, where you want things to go, but this will ask for your email, and you'll be getting emails with a bundle of assessments and all that good stuff. But we're not doing anything more with that information than just that, because we really are interested in this.
Yeah. It just does really strike me as a huge aspect of the trading world because we have expectations, and if I lose a lot of money, I'm going to be really upset. So we need to have a plan, like you say. You need to have a plan of how you're going to do your trading, but also a plan how you're going to deal if something doesn't go the way you want it to.
Yeah, I mean, and I say don't be disappointed, and I mean that, but I know that it's human. I mean, I get disappointed at times too. It's just the more we can push that over into, okay, what can I do differently next time, you know, to regret. And then also the practice of letting it go is super important, I think, in all aspects of life, but certainly with trading, because, you know, like I say, the opportunity train stops where we are, and for everyone in your strategy, it should stop by your place every day. We have lots of opportunity when we're trading, and if you didn't grab this one, hopefully you grab the next one, so and you need to be ready for that next opportunity.
Definitely. So I have one. Are the assessments self-assessments?
So we're going to send you a group of self-assessments. If you want to participate in something that's a little more interactive, we'll send you that sort of that as an offer also that you can decide on. We will probably do a webinar on those so that, you know, people can talk about what they found in their thing, or we can do some private consultation too. But right now it's sort of an exploratory piece that we're working on, and we're thinking that, you know, Trading Sim, which is the simulator we love, might work with us also on that, so we can sort of get to the bottom of some more of these issues. But right now there's some self-assessment, some that's more interactive. Good question.
Great. Okay. And then we have another. Do you have stats for your strategies, such as win versus loss ratio, max drawdown, Sharpe ratio, etc.?
Yes, absolutely. There's 16 years of that. So if you if you text Psych, and then you'll have access to the website, then we can direct you to where you see that. It's spreadsheets that are copious and detailed, and you can go back and verify and all that stuff. So that's for one of the strategies, and then the other strategies we also have stats on too.
Okay, cool. Yeah, because they said their problem is that unless they have a full stats in front of him, I'm convinced, and she is convinced that it's a good strategy to trade. I haven't been able to make trades. I guess that you're saying that you haven't been able to like pull the trigger and go for it, right? So that's who asked about the stats.
That's a lot
Okay.
of inertia. They call it inertia. There is a lot of paralysis over that. We do have folks, so people who are attracted to our type of trading, some are software engineers and some are entrepreneurs, and our software engineers tend to be very heavy on the spreadsheets, and they are wonderful. We love them. So they have satisfied themselves with forward testing. We always do forward testing anyway, so all of our results are actually results. They were forward tested. So we said what we were going to do, and then we recorded what happened, you know.
That's excellent. And then how long should it take to overcome bad trading habits? That's a loaded question, isn't it?
That is really interesting. It's so funny. At one of our boot camps, father and son, adult son, were there, and the dad was going over the whole thing, and his son was going to move from teaching Latin to trading, and actually had some experience with the futures market, and so, but the dad looked at me and he said, okay, well, you know, what can he expect to earn, blah, blah, blah. And I looked at the son and I just said, well, I don't know, are you good at this? So, I mean, it's very individual is what I'm trying to say. So,
so let's say we had some parameters and the person was very committed and they were taking a course that would teach them to overcome their bad habits, because you have to replace a bad habit with a good habit, right?
Right. Yep.
So how many, I mean, isn't there like a standard number of days that it takes to replace a bad habit of any kind?
They say regular habits, I think it's 3 weeks. They say it takes 3 weeks to replace a bad habit. In trading, and if you're trading I guess it depends what you're trading to. Are you trading every day? So if you can practice good practices every day, you're probably going to be able to mechanically do that pretty quickly. It's a matter of, will your brain let you do it? So for the last person who doesn't trust a strategy until they see that it works, they're going to probably have to take some time to see how it works. If this person that is asking this question is different and they're willing to just blindly say, you're going to teach me what to do and I'm just going to go do it, man, it could be within a month you could do that. most people, I'm going to really say when I look over different trading coaches and other psychologists and people who've worked with traders, they're saying anywhere from a year to 18 months. And when I work with our guys, it's kind of like that too. You have to, depends who you are, and if you have to prove it to yourself. People who've traded for a long time sometimes get, however, are people who grab a hold of one of these strategies and they run with it, and it really hasn't taken them long at all. I mean, a week, 2 weeks, 3 weeks, something, you know, so it's individual.
Okay.
Are
Well,
you
that's
good at
fantastic.
it?
That is fantastic. Yeah. I mean, really, when you're talking about the psychological side of things, it's just like an uncharted planet because we're
Well,
all
and
so different.
exactly, and that's what I was really trying to get across, that it's all, there's so many different ways to approach psychology. There's so many different ways that are going to be useful for each individual. There's a little bit of that too, finding out, okay, what is my challenge? And then what are my strengths? And then how do I address these challenges, and you know, what approach can I use to get there? And some people can just be disciplined. A lot of our guys, you know, sometimes it's just a drop dead. Okay, that first hour is done for our style of trading. First hour is done, I'm leaving. Because they'll say, look, I'll overtrade and I'll give it all back. And they appreciate that. They log out of the room and they go and they do something else. And that's
Yeah.
important for that person, right? Other people are like, no, I can be there. I just need to have this kind of a structure around it. So.
Well, that is fantastic. All right. Anybody got any other questions for Julie? I just want to make sure that we're good. And thank you so much. That was
Thank
an amazing
you.
presentation. We appreciate
Thank you so
you.
much.
And we
That was fun.
appreciate you juggling the dates and the times.
Oh,
We
are you kidding?
really,
Sorry that it was so juggled. So anyway, we're flexible.
well, we appreciate it. And we definitely do want to get you and Adrian back in the coming months together. Adrian mentioned it to me, and I think that's a great idea. So I look forward to it again. And thank you so much for being
Thank
with
you.
us.
Thank you so much.
All right, guys, we're going to move on now to Dan Passarelli with Market Taker Mentoring. And I got to check off the right person. I'm not sure. Just a second, folks. Okay, I think I did the right thing. Dan, are you with us? He's going to be talking to us about how earnings trading can be your most profitable trade. What if you could trade a strategy that's immune to market volatility, that can make money no matter what the market does? Well, you can. This simple strategy involves trading earnings. And in this webinar, Dan Passarelli will share with you how it works and how you can get started. So take it away, Dan.
All right, let me just get the, hold on a second here. Gotta make myself the presenter. Hold on. So yeah, Sherry, I think you need to make me the presenter.
Yes, I'm trying to make you the presenter, but it says you have control. I'll go out and you stay in. I'm afraid to go out though.
Yeah, don't do that. That would maybe be a little dicey. Just give me 1 second.
Oh, I know what I'll do.
This is me.
Yeah, the one that says Kathleen is presumably you.
Yes, there.
There we go. Hold on a second here. Okay, good. Awesome. Hey, thank you very much, Sherry. This is really all super great.
Fantastic. Thanks for joining us. Now I'll mute myself.
All right. So hello, how you feeling today? I'm Dan Passarelli, and thanks for joining me. I am so excited to be with you here right now. Today, I'm going to share with you how you can make money in this market with a little known unique trading opportunity that is immune to the crazy volatility of this market. And this is what I do in all markets, including and especially in this one right now. it's the best opportunity I know for you to make back losses from the market downturn and quite possibly make this the best 6 months of your trading that you've ever had. And this unique opportunity involves trading around earnings announcements, and I've cracked the code on how to do it. And since earnings season has just begun, I wanted to come here and introduce how this works and give you the opportunity to take the next step and start using the system immediately. Sound great, everybody? Give me a yes if that sounds great. Yes, yes, yes. All right, good. Thanks, Robert. Thanks, Paul. Thanks all you guys. All right, good. Now, before we get started, I want to point out options are not for everyone. You should read characteristics and risks of standardized options before trading. All right, so let's make sure that everybody's in the right place and in the right frame of mind. And I like interaction in my presentation, so feel free to have a little back and forth here. I'm going to read some questions. You can type a yes or just the letter Y if you agree with any of these questions I'm about to read. All right, ready? I'm here because I want to secure my retirement and future financial freedom. Is that you? Go under questions, type the word yes or just simply the letter Y. Thanks, Paul. Thanks, Shelly. Thanks, Mohan. Thanks, Stephen. All right, how about this? I'm here so I can tap into a trading strategy that's immune to this current market uncertainty. All right, thanks, Ron and Robert and James and Stephen. I am one of these two. I'm either new to trading and want to fast track my success, or I'm already doing pretty well, but I know I can do better. How about that one for you? And then this is my favorite. For me, winning is the only option. I will do everything necessary to protect my family and my financial future. That is the big one. This is where I always get the yeses. So Stephen, Mohan, Santosh, Vinod, hope I pronounce the names correctly over here. Robert, James with some capitals and exclamation points, Ron. All right, yeah, because you know what? All that's really important, and trading can be a great vehicle to do this. Now, this market's been tough for a lot of people lately, and many traders I've talked to have lost big and are looking for a way to make it back. And even the ones who've done okay or made money in April and May when the market rallied have now fallen victim to surprises and head fakes and misleading narratives that make it impossible to get the results they want and the financial freedom they deserve. It's tough lately, and you know what? It's not your fault. It really isn't. This is my promise to you. I'm going to show you how it's possible to make back some of those losses from the recent market crash and all this volatility, so you don't have to rely on buying and holding and praying possibly many years to regain your financial freedom or to regain a sense of control over your trading. The technique I'm going to share with you that can help you do it uses my proprietary earnings trading system. And at the end of this presentation, I'll share how you can take the next steps so you can get started with immediate results. Fair deal? Is that a fair deal? And again, don't be afraid to participate here and answer. Let's have some fun with this. Thanks, James. Also, the only way to make a change is to follow through and take action. You're the one in control. I'll help you as much as I can, just like I've done with our most successful traders. In order for you to get the most out of this and be able to take the next step, why don't you, if you haven't already, turn off your cell phone and close, Facebook and anything that's not important, shut your door and let yourself really get immersed in what I'm about to share. This is your time, so allow yourself to give it your full attention. And to keep the focus, I'm going to hold all questions until the end of the presentation, but feel free to chime in with some, with some positive, great statements. So let's keep it fun and positive. So this is a pictorial representation of who I am, what I do, some of the organizations I've worked with in the past, for those of you who don't know me. I traded down for years on the floor of the Chicago Board Options Exchange, wrote 2 of the most popular books on options trading. I've worked with every major options broker in the US and abroad, as well as pretty much all the options exchanges around the world. I've gotten to do some pretty cool things, which is great. I get to be on TV a lot. You know, I have a lot of fun with it. But enough about me. Let's talk about you. Here's the thing. If you've traded earnings before, I can help you do it better and be more profitable with less risk. If you've not traded earnings in the past, then you're in the right place at the right time, because I am the foremost expert on trading earnings. Now, for those of you who do know me, you know that I'm not like cocky or anything like that. I'm definitely not saying that because of ego or anything like that. I'm saying it because of my experience. And that alone is why you should follow successful people in this business, because their experience proves they know when and how to take money from the market. I'm here to show you exactly what I look for in my process before I make an earnings trade and how simple it can be. And so, you know, I'm not shy about saying it. I'm also not saying trading's easy by any means, but I have my strategy down to a simple 3-minute scan that will blow your mind. I've taken the decision-making process of whether a trade is worthy of your time and energy all the way down to as little time as the amount of time you should spend brushing your teeth. Hopefully you spend that amount of time. True story. And today I'm going to share that process with you. And by the way, do you mind if I share a quick story with you? Mind if I share a quick story with you? Let me know, give me a yes if it's okay. Thanks, Santosh. Thanks, Shah. Thanks, Robert. Okay, good. Thanks, Paul. So this is me with my little sister. She has no idea I'm putting her picture in this presentation. If you know her, don't tell her. This is probably about 1979 or something. A lot of kids think they want to be a doctor or fireman or a teacher of some sort, but for me, even at that age, I wanted to be a trader. I saw them on TV growing up in Chicago. There was a lot of them on the news. I'd see traders in their jackets down the financial district, see them on the train. I was surrounded by them, and it excited me to think they could make money doing it. So right out of college, I took a stack of resumes and went job shopping. I literally knocked on every door of the Chicago Board of Trade building, handing out those resumes. And lo and behold, guess what? I got a job. And that's where I cut my teeth. I worked my way up from runner, which is totally entry-level job, to becoming one of the biggest traders in my pit. I started actually trading in the pits in 1989, and I'm not gonna lie, life was good. It was a freaking great time to be on the floor of the exchange. You guys remember what was going on in 1998? Who remembers what was going on in 1998? The internet starts with the internet, 1998. What was going on then? Was it the internet rally? Is that what they called it? I forgot. It was called the internet rally. Yeah, that's what it's called, right? No, it wasn't called that. It was called the internet bubble. And you know what eventually happens to all bubbles? That's right, they all pop. And for most, when the internet bubble burst, it didn't really look like this cute little girl who'd pop the bubble and giggle and blow another one. It was more, something like this. This is basically what happened to a lot of people. And I don't really talk about this a lot, but this is kind of what happened for me. I'd never seen a crash like that before in my career at that point. But back then, I didn't know how to handle it. In some ways, I did better than some, but it was bad. It was one of the things that was the beginning of the end of my career on the trading floor, actually. I went into a dark time, and it was really, really hard. I struggled a lot. I wondered if I'd still have a job, and I wondered if I'd be able to keep my house. It was really, really a difficult time in my life. But then I had an opportunity. It's funny how opportunities seem to come at the right time, isn't it? And after a market crash, when things aren't going as well trading anymore, and you get an opportunity, what do? You act on it. This opportunity changed my life and sent me down a path that I'm on today. The exchange asked me to come and teach classes for them, and I found that was my calling. At that time, I started trading in a retail account like you here on this webinar, learning a different way to trade than I was used to on the trading floor. And I discovered that there were strategies that I wasn't using on the trading floor, or at least not trading them the same way, that I could help weather the storm, and that could make money in all market conditions, up or down, even strong bear markets. I made it my life's work to give back to the trading community and share these strategies with all traders and help whoever I can, however I can. So we had an event in Chicago with some of the traders we've helped, and we stopped into the Chicago Board of Trade where I do some of my TV interviews, and I've got a lot of friends there, as you can see. When you're watching traders on TV talk about the markets, they're there to share what they're watching, what they're trading, what's making money. And many traders make a living simply out of playing follow the leader. Good traders don't reinvent the wheel. They follow the leader and do what works. They watch what the top traders are doing and what's working right now and mirror their road-tested strategies. Are you following me? Yes, give me a yes. Are you following me? And also taking action. It doesn't matter if you have the best opportunity in the world before you. If you don't take action and make it happen, it disappears. Now, this is a chart pre-market crash. Goldman Sachs was up 23% over this 12-month period. Question, would you be happy with a 23% return in a year? Not rhetorical question, literally question. Would you be happy with a 23% return in a year? Getting mostly yeses here. I'm getting mostly yeses here. I got a not really, mostly yeses. So right now, many traders would be thrilled with that because trading is hard for a lot of people because they rely on the markets going up. But what if I told you there's a strategy that it doesn't matter if the market goes up or down, you can still make money and potentially really good money? Well, here's the big news. Traders can do better than returns like these in all markets. And the real big news is you have to. Right now, interest rates are near zero. That's bad for banks. The market's very volatile and hard to predict. That's bad for money managers. Do you know what saved firms like Goldman Sachs lately? Their trading units. So look here. Goldman has 36,600 employees. The average salary is $367,564, and that includes all the interns that go and get coffee. The traders do a lot better. Now, 36,000 divided by that average salary, or times rather that average salary, that's $13.5 billion in salary they're paying out every year before bonuses. For Goldman Sachs stock to go up 23%, that's the retained earnings. That's not counting all they make to pay out $13.5 billion and all those big bonuses. In order for their stock to go up 23% a year, they must make hundreds of percent a year. These are the kind of trades professional traders make. That's why they make 300 or 400 grand a year before those gigantic bonuses. When I started on the trading floor, I started with a $30,000 trading account. Making trades like this daily, weekly, and monthly enabled me to turn that $30,000 into, well, let's just say well into the 7 figures. That's a lot more than 23% a year, even compounded. This is what's possible. And this is what traders are doing every day. So let me start out with a question. If you could consistently make money week after week, month after month, would you trade with more confidence? Yes, no, maybe so. James says yes immediately. So does Santosh. So does Ron, so does Robert, so does Mohan, Derek, Stephen. So look, the only way to do that is is to have bread and butter strategies that are data driven and road tested so that you can be consistent. When you're consistent, you're more confident, and when you're more confident, you trade better, and it's this wonderful positive circle. Right now, the strongest consistency trade is the earnings trade. There are many advantages to earnings trades. They're super powerful. A big advantage is they're market independent. When I'm making these trades, I don't care about direction. I don't care if the market is up or down, even big. I don't care if the stock that I have the trade on goes up or down. They're totally direction indifferent. They're also very short term on each trade, which limits broad market exposure, which further helps you not care about the direction of the market. They have potentially greatly leveraged profits. There's an extremely yes-no test to screen trades. And the opportunities are concentrated in a short period of time. The biggest week of opportunities is less than 2 weeks away. It's 12 days from now, starting July 27th. Remember that date, July 27th. That's when there are literally hundreds of earnings announcements every day that week. We are at the beginning of a life-changing time to trade. So if the biggest part starts in 12 days, answer me this: when's the best time to get started? When do I have to be prepared for that week? Should I wait until next month to be prepared? No, James here says now. Now is the best time. Obviously, you can't wait. Like, if you want to control your own destiny, it's time to control your own destiny now. And the biggest advantage to earnings trades is they work. And it wasn't until I was a trader, like most of the traders attending this webinar, trading a retail account, that I discovered the power of time spreads. Ironically, after trading thousands of time spreads on the trading floor and honing my skills with them, mostly in the form of risk management and execution, I learned the last 10% nuance that pushed the power of time spreads over the top for me in a strange way. So about 5-6 years ago, long story short, I found myself on the phone with one of the producers for Bloomberg Television. And he asked me to come down to the trading pit to interview me and talk about the market. And I'd never done that before at this time. I mean, since then I've done it a lot, but that was the first time that I was asked to be on television. And so, it was kind of exciting. I was like, oh, this is cool. Yeah, I'd love to do it. It's, kind of I think everybody would be a little giddy about that sort of thing. Not embarrassed to say I was. And he says, okay, look, so here's what I would like you to talk about. Apple has earnings coming out tomorrow. I want you to give me a trade idea on how to trade Apple's earnings. And it was like, oh no, it was like the record scratched. Somebody scratched the needle across the record. It's like, song's over. It's like, oh no, man. And I didn't say anything, but I thought in my head, I don't trade earnings. A lot of people don't realize this, but most professional traders don't trade earnings. They're actually not allowed to by their risk manager. And so I was like, because that can be the biggest move of the quarter. And so there's the most risk because no one can predict the direction on earnings. So I was like, oh boy, I got to figure this out. Let me call you back. My mom's calling me. I'll call you in 5 minutes. So I immediately hung up the phone. I log into my trading account and I wanted to find a trade that made sense because I always put my money where my mouth is. If I'm going to talk about a trade on TV, I'm literally going to have the trade on in my account, right? It's just a moral thing for me. And so I looked and I was like, well, no, I can't buy calls or puts because nobody can guess direction. Like any professional trader will tell you that. I can't do credit spreads. Selling puts is like too big a risk to the reward. And I looked at everything and then I was like, I don't know, let's look at a time spread. And lo and behold, it was actually great. It was like a total no-brainer trade. It was so strong. I immediately put it on, did the interview, and it worked like a charm. And I was hooked after that. Later, I came across some data that I'll show you in a minute that gave me the black and white proof that this was no fluke. When the right criteria are met, this is a genuine consistency trade that can be used over and over again to crank out consistent profits during specific periods of the year, particularly earnings season. Now, here's the breakdown of this system. About 95% of the trades are going to be time spreads. A time spread is when I buy an option and then I sell another option that has a shorter amount of time until expiration, but has the same strike price. And they're both calls or they're both puts. And as the data show, these usually work out great, as you'll see on the next couple slides, when certain criteria are met. And this is really important. I'm definitely not saying just go out and trade a time spread on every single earnings play. That would be a disaster. It would not work. But when certain criteria are met, these work great. Now, other times when other criteria are met, we use straddles about less than 5% of the time. Straddles are often weak when it comes to earnings because of the implied volatility explosion leading up to earnings. Straddles just get too expensive. But when we do our yes/no screen test, we'll show that there are times, less than 5% of the time, when they work, but mostly we're going to focus on time spreads, and let's look at why. There's a lot of data here. Don't get too hung up on trying to read all the numbers. Later, I'll explain how to simplify all this. For now, here's what's important. Here's what this slide shows. If you sell short-term options the day before an earnings event, they lose value greatly once earnings are announced, the next trading session. Now, longer-term options also lose their value between putting them on the day before earnings and then taking them off after the announcement. But the key element of this observation is that the short-term options lose way more value than the longer-term ones. So what that means and what this essentially proves is that trading time spreads around earnings announcements is effectively a long-run consistent winning strategy, and you can see here the results. These are basically the steps to follow this system through earnings season. There are a few details involved, but this is basically the gist of it. So write this down. First, we find all the optionable stocks that have earnings coming out after the close today or before the open tomorrow, right? Got that? That's important. Are you following me? Give me a yes if you're following me. Yes, 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 yes. Thank you, Shah. Thank you, Robert. Thank you, Santosh. Okay, thanks all of you. So we find several trades a day. Sometimes there are hundreds. For example, the week of July 27th, there are literally hundreds every day. That's an extremely important week. We screen those trades using the yes/no screen technique to see if we should continue on with the potential trade. This is your first step, and it'll literally save you hours and hours of your precious time and make your life so much better. Not to mention, it'll ensure you're only trading the best trades, the ones with edge, meaning they have a statistical advantage in your favor. So your win rate increases and your winners are bigger. Like this? Yeah? Give me a yes if you're liking this. Yeah? Bigger winners. So we only continue on with trades that have a positive term structure of volatility, and the greater the disparity in the term structure, the better. This step is critical. This is what I did on the trading floor every day, and then put it into the earnings system to simplify for all of our students. Next, we run the is-was check by modeling the time spread on tomorrow's days with a variant vol crush on both the short-term and the long-term option based on a partial reversion to the mean, but also relative to realized volatility, and compare to the past to get the modeled and durable gap, okay? The modeled and durable gap is just my way of making this completely foolproof and black and white. If you can get that, it's foolproof. So it's super easy for you. Once you have that, you'll know exactly which trades to put on and which to stay away from. Now, here is where most people go wrong. We put on the time spread the session immediately before earnings. So this is a less than 24-hour trade. That's critical. We follow the MTM proprietary earnings trade technique that I just showed and exit the trade at the precise time the following day. Everyone screws this up, but I'll show you how you can get the timing right later. And then it's just rinse, wash, repeat. So this is a trade that I had in McDonald's a few earnings seasons ago. And the day before earnings, here's what I did. I bought, this is a time spread. I bought 10 of the McDonald's 11 days to expiration, 165 calls at 211. Sold 10 of the McDonald's 4 days to expiration, also 165 calls at 175. So paid 211, collected 175, paid 36 cents. The very next day at the specific time, I simply closed it. The one I was long, I sold. The one I was short, I bought, all part of one trade as a time spread again. So I sold to close 10 of the 10-day 165 calls at 281 and bought to close 10 of the now 3-day 165 calls at 129. So I collected 52 cents. So recap, the trade made 16 cents on a 36 cent trade. That's 44%. Let's make this more tangible. If you bought a 10 lot, you'd have risked $360 and made $160. Factor in commissions, of course, and this is a solid trade. Now notice, and this is important, I wanted to make this as black and white as possible. So I assumed that on the one I bought the offer, and the one I sold the bid. But in reality, because the bid-ask spreads are wide, particularly on the closing trade, which is almost always the case, if I'd have used the technique of middling the market, the profit would have been a bare minimum of about 20 cents better, which is like $200 more on the 10 lot, or in this case, a 100% return. But again, I just wanted to show in this example, just like a pure, unarguable way. In reality, managing the bid-ask spreads on closing the trade is where most people go wrong. People leave thousands of dollars on the table every earnings season by not doing this part right. The results here I show that are sort of the worst case scenario are good, but they can be great. Now, I wanted to make this very realistic and show you exactly how this works in real life when you middle the market with the MTM 2520 middling technique. These are some screenshots of my actual account on an earnings trade I made in a past earnings season. This is Oxy. So the day before earnings, I needed to buy 10 of the longer term, the February 22nd 66 calls. They're offered at 150, but I actually had a trade price of 149. And then I had to sell the February 15th 66 calls. They were 130 bid, but I was able to trade those in the middle of the market at 131. Now there's some nuance to this, but this is important because I saved 2 cents. That's 10% on this trade. And that helped. I mean, it makes a big difference. The next day, following this exact system at the exact right time, I took the trade off. I put it in an order to sell at 30 cents. I got 2 out of the 20. And then it started moving away from me. So just going in and following the rules, I stepped down and I went down to 27 cents, got filled on the balance, and that ended up being a real nice profit, 51.7% profit in one day. Now, does every single trade work out and make money? No, you're going to have an occasional loser. When we did this last time, we had 83.3% winners. This is an example of what can go wrong. The day before earnings, I paid 20 cents for this time spread in MGM. The next day it went against me. So I went in, followed the middling rules, went in at the right time, took a loss on this. In this case, it ended up being a penny, 5% loss in one day. The losses can be small and they can be very manageable. And I can go on and on. This is Las Vegas Sands, paid 50 cents the day before, took it off the next day for 70 cents. That's 40% profit before commissions, of course. So, you know, again, I can go on. And when we're in the heart of earnings season, which we're just about to be, you've got hundreds of opportunities to analyze. But the key is to be consistent. We're not looking to just, try and get rich on one trade. It would be wonderful, wouldn't it? But if you are good enough to get rich on one trade, you would want to make a whole bunch more and get even richer. It's about consistency always, no matter how good you are. Management makes money. All those trades I just shared, the getting in is super easy. Entering the trade, all you have to do is follow the checklist. If you can follow a checklist, finding, analyzing, setting up, and making the trade is so easy. Now, closing the trade is simple too. We simply take it off the next day, but it requires a little nuance. I'll show you a resource to make those nuances easy to manage in a moment. This is a system, and that's why this is easy. Work the system works. Are you getting this? Are you getting this? Thanks, Santosh. Thanks, Derek. Thanks, Stephen. Thanks, Paul. Okay, so look, let's talk about realistic expectations. How often can you find trades like this? All throughout earnings season, there are hundreds, and even when it's not earnings season, because only about 70% of stocks announced during earnings season. So these are year-long trades, but right now we're coming up on the most concentrated opportunity of the quarter. Are these returns common? Yes, earnings trades can yield highly leveraged profits with low results, but what if it doesn't work out? The risk is limited, but more importantly, it's manageable and can be a small fraction of possible gains. This is all part of a winning mindset. We have students who are determined to win. Winning is the only option. When you make that determination for yourself, there can be no stopping you. We have people in our community chat room who are some of our top money-making traders that post their trades real time for all to see. That's their attitude. So here's how to make this work. This is a simple process that anybody can follow, but the timing is very urgent because earnings season has just begun and it is about to be in full swing. You can make the next 6 months your best of this year and repeat that success in future earnings throughout your career. And like I said, this is important. Earnings season has just started. It's here right now. That's why I'm giving this presentation today. Your timing's crucial, so get ready to take action now. And your time's valuable. Do you really have years to play around figuring it out for yourself? I mean, how many months or years have you spent so far? When's enough? When do you want someone to simply show you what to do and do it and begin seeing immediate results? And your time every day is valuable too. I talk to people who've tried to play around figuring out earnings trades. They spend an hour or so looking at their screen and make a trade and basically hope it works out. And it's time consuming, it's stressful. And you can't make money if you're uncertain or stressed. The earnings trading system literally takes just 3 minutes to find a trade. And it's following a simple checklist. It takes all the guesswork out. And that not only saves you time, but it reduces your stress level so you can trade better. This is the Total Earnings Domination All Access Premium Package. In this course, I'm going to share with you my system for beating the market that I started discovering on the trading floor. So you can trade consistently and confidently and have peace of mind with simple, data-driven, low-risk technique that you can take action on and start using today. Here's just some of what you'll learn: how to easily scan the market for earnings trades, where to get the real-time data to pinpoint the winning earnings trades, the best time of day for entries and especially exits, the yes-no screen technique blueprint, the earnings time spread risk checklist, how to calculate the ever so important is-was gaps, and how to manage the wide bid-ask spreads on closing the trade. So you now have an opportunity. This trade is going to help you trade more consistently using a strategy that works in all market conditions. To get a blueprint for trading and to watch live setups on earnings trades so you can easily follow along and make the next few weeks your top performing weeks yet, and to hedge your portfolio and make back losses and trades already in play. So this is our total earnings domination premium, all access premium package. I'm going to make this really easy for you. This all access premium package is for a full 6 months. So first of all, let me share with you what you're going to get with this class. You begin with the brain dump trick part of the training. I'm going to put 27 years of my experience into your head with one video. That's where I explain the whole system. It's the keys to the kingdom. That's a $2,995 value. Why is it $2,995? Because if you can make the kind of money we're talking about consistently on daily trades throughout this earnings season and for the rest of earnings seasons this year and forever, this small investment can pay profits over and over again that can last a lifetime. And the best part of it is it's just a one-time investment. As you can see, there's no auto renewal on any of this. Now, I sign up for a lot of online classes too, not trading classes, but classes so I can help learn to build great classes to help you ramp up your trading fast. I know no matter how great a video class is, I'll have questions. I want someone to show me exactly what to do. Today, you're going to get hands-on training. All right, starting July 27th, you'll log in and watch me trade live in a real money trading account. So you'll see exactly what to do and you'll follow along with me. These 5 live classes are where it all comes together because you'll literally see the system being traded in the live market and follow along and make your first trade together as a group. It's the ultimate hands-on training. And we want you to literally have this mastered. So you'll get our 4-part on-demand video masterclass, earnings trading techniques from 2 decades on the CBOE trading floor. You'll know exactly what to do every time. This puts the power into your hands. And then you'll have questions. So you're getting 6 months of the MTM community chat room. So you'll be able to log in and get all your questions answered by me or our other coaches. But another huge sort of secret benefit is that the MTM community chat room is where our top money-making traders log in and post their trades live real time. If all you got out of this class was to watch some of our top 6-figure traders posting their trades real time so you could follow along, wouldn't this be worth it just for that? And this all access premium package is valued at $7,437. But I want to make this a complete no-brainer, completely irresistible, so you immediately are able to sign up right now. A 1,000,000-mile journey begins with the first step, and this is that step. So go right now to markettaker.com/win, and instead of paying $7,497 right now, you'll pay just $497. Ready? 1, 2, 3, go. It is open for you right now. That's a massive 93% discount. And why would I give such a huge discount? Because right now, more than ever, traders need help. And this is the best way I know how to give it. Earnings season's already started and the opportunity is right now. And I want you to be one of the 1,000 trader success stories we hope to create this year. People who take action are the ones that can be great traders. Those of you who see a great opportunity and fearlessly act on it, you're the ones that we know we can truly help. Those of you who see a great opportunity and fearlessly act on it. So we are going to give 93% off for the first 45 subscribers that join us right now. But I want to make sure that this works for everyone. So here's a special extra bonus that's not on that slide. I want to make sure that even if you are brand new to options, whatever your background is, you can trade this simple strategy. And I'm going to make sure of it by giving you our Options Impact video course, which is our basic level course. We offer that on our website for $497, but to level the playing field, this Kickstarter series includes 8 on-demand videos to put you on the fast track to maximum gains for this earnings season. So even if you've never traded an option before, you'll watch that video series first and you can begin trading this powerful earnings system. And also, here's the big one. I'm going to give 6 months access to the course every one of our top traders has gone through. This is the MTM Online Education Series. I personally teach this class. It goes beyond the basics, way beyond the basics. Each month we pick a different topic to drill down on and give you near expert understanding of it so you can achieve mastery as an options trader. We have all these series, how to adjust, how to trade in volatile markets, how to make income strategies work, how to execute trades in volatile markets. You get all these live every Thursday afternoon, plus the last 4 months are recorded. But here's the thing. I only want people to join us who are ready. I only want people who are sick of losing money, who are sick of being frustrated and are ready to make it happen. And those of you who are ready to take action, you're only the first 18 will get this bonus by going to markettaker.com/win right now. I'm taking 45 students today, but only the first 18 get this bonus. So I'm going to take a couple questions in a second, but the timing is crucial because Monday, July 27th through Friday, July 31st is the biggest week for earnings this year. In fact, this earnings cycle is one of the most important in the entire history of the stock market. Analysts are waiting to see what the earnings are to give guidance for the future, and that means traders can make more money than ever before. And this process is starting in 12 days, so we're giving you just enough time to come and join us, to watch the bootcamp video, to watch the master class, to be prepared for those 5 live trading sessions where we trade together. And I'm going to prove to you that anybody can do it I'm going to personally trade a real money account with less than $10,000. So no matter what your experience level is, what your account size is, you can make this happen for yourself. We had Jill from Cincinnati, Ohio, one of her first trades, 41.5%. David here, he says the class has paid for itself, and that was just in a couple trades. Russell, he had over an 80% win rate. Maybe the others were only like a 5% loss too. We had one student who became a professional trader. So I only have time for a couple of questions because I don't want to go over because we've got a really great speaker coming up next. But if you have any questions, please send them in right now. Welcome. I noticed a couple people just joined us at markettaker.com/win. Please take advantage of this 93% off discount. Now it's only $497. That's probably less than you invested in your last trade. Again, I've got time for Steven says he's in. Awesome, Steven. Welcome, 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 welcome. And good job taking that step and investing in yourself. Robert says, I believe some companies are not able to report earnings because of COVID, right? Yeah, but those are few and far between. There are some companies not reporting, but there are literally hundreds of opportunities that I would love for you to be prepared for that start on July 27th. Any final questions before I hand this back over to the hostess with the mostest, Sherry, and our next speaker, who's a really great speaker, is going to help you out as well. Any final questions? No? All right, then I'm going to pass over the baton. Thank you.
Great presentation. Thank you so much. And wow. Wow, that's going to be interesting to see how that week plays out. That's for sure. Thank you so much. Our
Thanks,
next
Sherry.
speaker, hey, have a great day, and we'll be talking to you soon. So our next speaker is coming up. It's Paul Lange of Disciplined Trading Strategies. He's giving us with his presentation of tips on management. Paul is going to discuss some tests you can do to reveal if your management is helping or hurting you, and some tips about managing long or short-term positions better. So welcome, Paul. Let me make you the presenter. And I think I've got it right here. And you should be live with us now. Can you speak for me, please? Let's see. All right, you're self-muted, so there you go.
There we go. Hi, everybody. Can
All
you hear me?
right,
Sure?
welcome.
We're good.
And I can see
you
your
have
screen, so
you have my slides up
take
too?
it away. Yes, I see them, so take it away.
All right. Well, welcome everybody. My name is Paul Lange, and I'm going to give you a little presentation on tips on management. I want to apologize. I have not been here listening to everybody. I was trading today and just logged in for the last 15 minutes of Frank, which sounded good. And I do want to emphasize something. There are different ways to make money in the market, and I just want to make it clear that I have kind of a unique way about talking about things and doing things. I've worked with people for a long time and helping them to perfect their trading. And what you might hear from me might be a little bit different, and I don't want to step on any toes. What I'd like to do, another thing is different is I know the format here that I am a guest, and thanks for having me here, Sherry, by the way. But another thing I'm going to do is I know at the end I have some time allotted to present you with what I want to share with you in terms of a deal or offer. I don't have any of that. I don't do deals, I don't do specials, I don't do offers. I do have things that you can purchase on the website, but I primarily am focused on trying to help people in whatever way you want to be helped. And I have a tremendous amount of free information that's available. So I'd like to take the opening minutes and just kind of introduce myself, let you know exactly who I am, what I do, where I've come from. And if that has interest to you, you will follow me and check out the site. And you can look up all that stuff for yourself. So I'm not going to do anything at the end other than just invite you to an event that'll be going on Friday, which is also free, of course. So tonight's presentation is going to be tips on management. And this is what you saw when you registered for the event. So I'm not going to stay here. I also want to apologize. I may have to talk a little bit faster than normal, and I also have way more information that I can go through here in 45 minutes. So I normally try to be very clear when I talk and take questions. I do love audience participation. I'm not sure if I'm seeing you guys speak at all. I'm also not sure if you can see me. Can you see me when I type, everybody? And is anyone, Sherry, I'm not sure I see people. I love to get feedback from people. I'm not sure I'm seeing.
You should be able to see the questions. There's a little drop down for questions, and you can pop that out so you can see people interacting, but we don't have everybody talking.
Okay, it's just that one
And
called chat, right?
I mute myself so that I don't talk over you.
Okay. When I just sent test out there, was everybody able to see that?
I believe that was a private one in the chat. So let's see.
It says to organize. Can you make it? I don't see how I can send it to everybody. Okay. It says to organize.
At the bottom it says there's a entire audience.
I don't have entire audience available to me.
Okay.
Questions to staff, to Frank.
Okay,
you have
just
to
a
change
second.
something on your end.
Sorry, folks. Hold on just a second. We're going to. I'm not really sure how to do that.
Okay.
One thing that I do is I pop out the questions and I can see everybody talking.
Okay, well, maybe if you could relay it, maybe when I will post a couple things here, maybe you could just relay them if that's okay, if you can. If not, that's okay too.
Sure I can, sure I can.
All right, great. I'll just send them there. All right, so I'm going to take a couple minutes and tell you about me, assuming you don't really know me. And again, at the end here, we're just going to kind of conclude up. So I'm going to take a few minutes here so you can get to know me. You may not like my style. Most people do, quite honestly. When I get to talk in front of a group, I tend to hear from them quite a bit. I tend to hit home with a lot of things that I say. I like trading stocks and futures. I mostly trade stocks, US liquid stocks. I do like futures. I have a preference for stocks, and there's a good reason why, but I'm not going to go into that now because we won't have time. I also like to day trade, and I have a day trading room that people join me in, and I like to long-term trade. You may call that investing if you like. I call everything trading, but I also like to long-term trade, invest, things that last weeks or months. I personally do not like the very popular term swing trading, which lasts 2 to 3 days. It's fine if you are available during market hours and you're picking up entries during market hours, But to work another job and to come home and then to try and enter positions on open orders and hold them 2 or 3 days, it's a very, very difficult, I think almost impossible situation, even though many people are taught that's what they should do. So that's what I'd like to do a lot. And what I would like you to do when you can, I said I have I think I have the best source of free information available. If you could pass it on, Sherry, that's the link to the DTS website, specifically to the free stuff page. And there is just a wealth of information there. And this is not sales stuff. This is all just good information. As a matter of fact, it's such good information that people who take seminars with me are required to know everything on this page as well. So there's good stuff there. You can spend the entire weekend and you won't get through everything. There's videos and lots of other good things, everything from trade videos to prior events that I have done. If you like me speaking here, I do an event about every other week. And over the last 3 years, I have almost never even duplicated an event. I have that much information that I relay to people that in all this time, there's only been a couple of times that I've duplicated. And this happens to be one of them because I'm doing this for Traders Exclusive. So I picked one of my favorite topics. This is one of my favorite topics, by the way, management, and I'll explain why as we start to go through the slides here. Also, if you do, like what I have to say and like hearing me, you can feel free to set up a chat with me. There's a little link there where you can schedule some time to talk to me just about if you have questions, you want me to look at some trades you did, whatever it is. I've learned a long time ago, partly because I fell into the same category. I wanted to learn everything for myself. I'm a real do-it-yourself type of guy. And I go back 20 years and I wanted to learn for myself. And I set out to do it. And after about 4, 5, 6 months, I was actually doing okay. But I came to realize I was brand new to the market. I never was in the market before I started. I think that's a big advantage to not be in the market. It's a big disadvantage to be in the market as a broker or something like that. So if you're not in the market, it's the best way to learn. But when I started way back then, I didn't want to get trained either. So I respect that, and I try to help people who want to try to learn on their own. I guess you could say a lot of people after a period of time may eventually decide that they want to get some help, and some don't, and maybe some, I think you can make it, but it takes a lot of time, patience, and a very, very unique person to be able to do it on your own. And that is if you want to learn on your own. Naturally, I offer the possibility of you just getting the fish, so to speak. I have 2 services, a trading room, a long-term trader letter, where you can just follow along if you don't want to learn for right now. But if you do want to learn, I do have a seminar program as well. So you read the slide there about me. That's me. Let's kind of get on for what's going to happen here tonight. I want to stop on this slide first because it gets into the topic tonight about management. I consider trading, and I always use the word trading, and it doesn't matter what you're doing. What I teach can be used for Forex, for futures, for stocks. Again, I like stocks a lot, but when you're talking about trading, it's not just about some magic secret formula. That's what everybody's always looking for. There is no such thing. I can tell you that right now. If there was, very simply, I would use it. I'd have nothing against some magical indicator or something that just made money for people. It doesn't exist, I guarantee you. I've been around forever. I've seen them all, and I've witnessed them all, and they're all jokes to some extent. It is mathematically impossible for one thing, but it doesn't exist. Understanding the market, understanding charts, understanding how to make money is about what I call learning the language of charts. It's not very hard to do, but this is what I call my little 3-legged stool. And one of the 3 legs is that first concept that you would feel that you need to know, which is to have the superior technical understanding. A couple things about those 3 words. Number 1, making money is all about understanding technicals, about charts. That's where the truth is. You may not like to hear me say this, but you will never make money trying to understand fundamentals, the news, or the economy, because it's not that charts disrespect those, it's that all those are built into a chart. And this Friday, I'll be doing an event that you can attend. I'll show you how to get there, but I'll be talking more about that this Friday, so I don't want to go into it now. But maybe some of you right now are even saying to yourself, I've always kind of thought that myself. But the truth of it is that understanding a chart and making money in the market is much more akin to, cover your ears if you don't want to hear this, but it's much more akin to playing a video game, much more so than trying to understand the things behind these. Because as you can realize, as I'm sure many of you have come to understand, it's very hard to draw a correlation between news, earnings, economy, fundamentals, and then trying to put that into a price. It never correlates, right? That's because the market is such a tremendous forward-looking anticipator of price that you could be tremendously far off. And that's why most moves seem to happen in reverse to what most traders think should happen. Good earnings come out and the stock drops for 4 months. That's a common thing. How can that possibly be? If you're a fundamental trader, you can't possibly make money from that. So to me, it's all about charts. But what's funny is a lot of people get to learn charts, and they learn charts well enough to a level that they should be able to make money, but they don't. Because there's two other parts to this stool, and one is called what I call math and probabilities. And I call it, a summary of that is saying I'd rather make money than be right. It's kind of hard to understand that sometimes, but math and probabilities to me is a big part of the whole technical picture. And then there's psychology and or what you may call experience. Another big problem. And the reason I bring the stool up is because management, believe it or not, actually kind of crosses into two of these legs. To understand management, you have to have superior technical understanding. You have to know where it is that your target might be, how large it might be. Are we going for a home run, or are we going for just a small trade? And I like to call it knowing the zip code of where your target is. But more importantly is, how do you get from where you are to your target, preserving as much as you can of that profit and not giving some back? And this is where at some point it crosses over into being very psychological. Most people who fail at management, it's not because it's so difficult that you just can't understand the concept of where you should put a stop or where you should raise it or not raise it. The problem for most people is they get into this thing that I call a break-even cycle, and I'll talk about that in just a minute. Let me take a quick look at my notes here. I have some notes here. I always end up just living everything, so let me make sure I'm hitting all the points that I want to get here. Okay, boom, 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 boom. We're doing good. All right. So let's go on to some of the management topics here. This is my quote that I like a lot, and it's something you should really take to heart. I have worked with a lot of people over time, and I know, not only remembering from myself to some degree, but constantly reviewing with other people where the pitfalls are. Here's the quote: anyone who really wants to can learn to read a chart with plenty of precision to make money. It takes a little time. It's not a freebie. You can't do it by just spending a weekend on the internet, but that's what I mean by superior technical understanding. The way I teach charts, you wouldn't even recognize it. I mean, the things that you read on the internet generally are written by people who are inept and don't quite understand it. And if you learn everything you can by what's written for free on the internet, the chances are you'll learn just enough to lose a lot of money. And maybe some of you have been there already. Learning charts, truly, somebody who lives, I've lived with charts every day of my life for 20 years. I'm with them all day long. I understand them. And a lot of the nuances are very different than what most people think it would be. And that's why, remember, the vast majority of people who come to the market lose money. And you have to remember, that means you have to think differently. Second part of this, if you make money with that knowledge, depends upon your management. Eventually, all traders succeed or fail based on their management. I wish I could communicate with you directly because I'd like to hear your input on some of that. But given the time and everything, I'm just going to keep going here. To start with, think about this concept. Think about this for a minute. Those of you who have been trading, whether it's long-term, I don't care if it's long-term or you're holding something for weeks and you're going for a $6 target, or you're day trading, you're going for a 20-cent target. Think about this. Anytime you're in a position that eventually hits its intended target, any management that you do, any management will only cost you money. Think about that. Does that make sense to you? Now, I'm not advocating you should never manage. What I'm saying is that unquestionably, given the choice for most people between managing too much and not managing enough, 95% of the people do what? I can't see you type, so I'm assuming you'd be saying right now the right answer, which is they overmanage. They manage to the extent that they almost can't possibly make money. Purpose of tonight's event: awareness. Think of Alcoholics Anonymous. You can't begin to fix your problem until you admit you have a problem. So I want to make sure that you understand that while you may, if you are struggling to make money, again, whether you trade futures, Forex, stocks, whether you're long or short most of the time, whether or not you hold for minutes or for weeks, if you're not making money, you need to understand why. And the first step to being able to fix the problem is to admit that you have a problem somewhere. Second one, self-evaluation is critical. And the third one, some of the choices that you have in order to start making improvements. I want to take you through something about self-evaluation first. Let's take a look at that. Self-evaluation. Sally ends her trading. Sally sends you her trading summary for the day, and she asks you for some advice. Again, I really wish I could talk directly with you here, but trade 1, she makes $200. Trade 2, 150. Trade 3, 50. Trade 4, 50. And trade 5, she loses $500. And as a grand total, she lost $50 for the day, let's say as a day trader. Take a look at that for a minute and think to yourself, I wish you could type it, what advice would you give to Sally? What advice would you give to Sally? She made 200, made 150, made 50, made 50, lost 500, total negative $50. What advice would you have for Sally? As I do this for people, most of the time I get comments on the screen that start saying, well, Sally should set a maximum stop loss of $50, $100, $150, whatever it is people feel would be appropriate. And I want to caution you, because this is something that often is a big problem. Do you realize that if you decided to set a maximum loss of Sally, let's say of $100, in your mind you might be thinking, well, that means this negative 500 would only be negative 100, correct? And therefore she would have made an extra $400, would have made $350 this day, right? That's not necessarily true. Do you realize that if you set her max loss to $100, do you realize that she may have lost $500 this day? How can that be, Paul? Well, what if in order to make 200, she first went down 150? Same here, same here, same here. It could be that she needs that much room. So you can't make any kind of determination about management by simply looking at a list of numbers. In order to do this, you must have the charts, her trades, see what kind of style she's using, and understand what is needed to maximize her profitability. Your advice could actually hurt Sally, and naturally this would be intended for yourself. It's not as simple as simply saying, oh, got to limit that one loss. Sometimes you have to throw one to the dogs in order to get the rest of the trades to make more money. So it's simply not that simple. Another one, kind of a similar concept that I find many people fall into. You start off trading, and let's say you start off with a smaller risk. So you're risking 50 bucks a trade, let's say as a day trader again. And you go through the day and you make 200 bucks. Wow, nice trade, great trade. You make 150. That's really some nice trading for a $50 risk. That's kind of incredible. Make 50, not bad. Make 50, not bad. And then, oops, coughed up 500 bucks on one trade. You just didn't take your stop, didn't get out. Probably sounds familiar for some of you. You've been through this. Everybody's been through this. Here's where I ask if this has ever happened to anybody. And I ask you to type a 1 on the screen, and I say if you didn't type a number 1, you're a liar, including myself, because everybody's done this, right? So you end up the day giving back all your profit because in the beginning, you are not good at managing your losses. Well, let's fast forward down the road and you become a good trader, whatever that means. And you decide now that you're better, you're gonna risk $500 per trade, right? So the first trade you take, you make a couple hundred. Well, for a $500 risk, that's okay. I mean, it's not good, but at least you made some money, right? You know, quote unquote, missed money is better than lost money. Or I mean, excuse me, you can't go broke taking a profit. I quoted the wrong saying. You make another 150, hey, not bad. You lost 50, you made 50, you made 50, and then you lost on one trade. Now here the $500 loss is completely acceptable because that was your risk amount. You decided you would risk $500, and that's what you're willing to risk on a trade that goes wrong. And of course, what's funny is that a year later, you end up with the same exact track record. Notice, everything's identical. The only difference was you have switched from taking some really nice winners, but then getting whacked with the big loser, to getting all little chicken profits. And then when you have a normal loss, it wipes them out, but mathematically, nothing's really changed. Again, I ask you, is this what's happened to you? This is what happens to a lot of people. It's that psychological component to management, the fear of managing. And the fear is for traders across the board. There is a single solitary fear that dominates the market. It's what makes technical analysis work. It's that fear of being a loser. Nobody wants to be a loser. So that leads to the overly tight protection of profits. And then you get in this terrible break-even cycle. Let me ask you this. Have you ever had this pattern happen where you think you have a good trading plan and maybe you've really gotten firm, you've gotten mad and you're dug in your heels and you decided, here's what I'm going to do. And you decide that you're going to follow this plan and you have a trading plan and you take your first trade and it's a loser. And that happens, right? Trading is about probabilities. If you don't have losing trades, you're not really trading. You're not making money. You can't possibly. You have to have losing trades. So your first one's a loser. Wah, wah, wah. Your second trade you take is a loser. Wah, wah, wah. Well, that happens sometimes. Then you get the third trade, and guess what? It's your big winner. It's the one that's going to make your day, even covering the two losers and still making your whole day. That was your plan. This was supposed to happen. But guess what happens? You start making a little bit of money, and you look at the screen, you say, you know what? If I were to sell this now, I'd almost be break even for the day. Anybody thought this way before? Most people do. So you get a loser, you finally get your winner, it's going to make your day. But instead of taking it for the glory, you decide to just kind of bail out because you say to yourself, boy, now I'll be break even and I can start over. And then the pattern starts over again. Get a loser, maybe another loser, nice winner, but you take the winner out. And pretty soon you find that you're actually trading to break even. That's your goal now, is to break even, and you never get beyond that. This is where a lot of traders get awfully stuck. One common adage that is totally wrong-headed is you can't go broke taking profits. That's precisely how many traders go broke. While amateurs go broke by taking large losses, professionals go broke by taking small profits. It's not like anyone you know. We're going to get to a chart here to show you an example of something. Trader has taken some education. Trader has become technically adept. Trader has more winners than losers. Trader is able to consistently find plays that have decent moves. Trader feels good about trading and considers himself a success. But trader is break even at the end of the month. Trader is confident the next month will be much better. It's fairly easy to tell sometimes that somebody sends me some trades where they are in their trading process. Because at the first step, people just don't know what they're doing on a chart and they just do dumb things. But then sometimes people start to understand charts and they start to take some good trades, but they just end up break even all the time. And the reason is because they have their losses and they can't ever get the winners to make any real money. And it's not necessarily the chart didn't allow them to make money, it's they did not allow themselves to stay in the trade. You have to take good profits on good trades. It's hard to do. It's the hardest part of trading. One of the problems is that while we typically on a technical basis will define an entry literally to the penny, we can define a stop literally to the penny. I may end up managing both of those numbers, but at least theoretically they're defined to a penny. Where's your target? Your target is just such a wide area of probability, it's very difficult to even know exactly where you're supposed to go. So to start with, you have kind of an undefined area you're going for. And then number two, as you're approaching that area, you have money accumulating. And we do a bad job managing when there's money open on the table. Here's an example I just want to show you. Now, when I give trade examples from trades that I do, I always take them from the last couple days. I don't go back to the great trade from 2012 to find something because that's not relevant. I just simply do the best I can with examples from the, well, especially for an event like this at 3 o'clock, I couldn't use anything from today, although I had a heck of a good trade today. This is from yesterday. This is what I like doing. This is what I call extremely boring trading. This is a stock called Macy's. I do not like at all going after the crazy high flyers. I don't generally, once a month, I'll do some goofy biotech stock. I think those are just gambles. I think the way you make money is through what I call precision, finding just good old-fashioned boring charts that are not making exceptional moves. As a matter of fact, I like the ones that are just making normal moves, just moving maybe even inside the prior day's range. What you need to be able to do is see and define that a stock is going to move from point A to point B and capture that move. When you go after some of these crazy biotechs, I mean, sure, you can be tempted into these because you see somebody and say, well, look at this stock. As a matter of fact, today I played IBIO. First time I've done it all month. I don't even want to use that for an example because that's just crap to me. That's just, you know, taking a shot at something. What I like to do is boring stuff like this. Macy's, you know what? Money is money. You need a stock that has liquidity. You can buy all the shares of Macy's that you want. You need a stock that has precision and a defined move. This is what I like doing. So here's a little summary of the trade from yesterday. This is what actually gets posted in the trading room. I did this in the room with everybody. This is from yesterday, 7/14. Long over 646, so at 647, stop under 638. Macy's, you know, it trades a lot of shares, so you can get the share size that you want. And my question for you is this there, is that a good exit? Is that a good exit? It ran up, and it's for some of you that know trading, you would call that probably, sure, it's a great exit, it filled the gap. Well, that's really, for the most part, a fallacy in trading. Gap fills are not necessarily support or resistance or targets. They can be, but they're not necessarily. I did not take a target there. Didn't even think about it. You can see my first target, I actually took at 679. I did not feel it was an appropriate target. I took my target up here. I'll show you, there's two issues to taking a target there. Now this trade, just this trade made twice my daily goal. It's boring. It was done, well, I didn't finish it till about 11, what time was it? It was 12:30 when I trailed out of the back part of it. The first target hit up here. And actually the second target actually was for a little less because I trailed out of it. But there's two issues here. And number one is, how do you know that it's gonna go this high? Well, because when I get into a trade, I'm getting my entry off of a 1 or a 2 minute chart as a day trader in the morning. I also do similar concepts for long-term trading, but of course at different time frames. But I want to show you, this is what sets up my parameters for entry and exit. That's the 60-minute chart. So I was shooting for the area up in here somewhere. Now, in terms of the zip code, I picked the right zip code. In terms of picking exact 679, it was just kind of lucky. I mean, I could have been anywhere in that range. How did I manage to get there? How did I have the fortitude, the strength, the ability, the mental stability to go all the way up to here? You know how I did it? I wasn't sitting here. That's how I do it sometimes. I leave the screen. We in the day trading room, we focus on that first hour. I try to get into a couple positions, try to make some money from an early first target when I can, and then I walk away for an hour, come back and check on things. That's what we do in the room. The room is mostly a trading room for the morning it focuses on. There are some exceptions. On Monday, or actually, well, I was on this day, on Tuesday, we had to come back because the market pattern was such that I felt there might have been opportunities in the afternoon. But generally try and hit the morning. And when I'm in a trade that I'm in and get into late morning or something like that, if I'm trying to shoot for end of the day, I'll often leave for a couple hours. You can put your, you know, your automatic stops in and your targets in. You can do whatever you want, but I like to leave because I also can cheat myself on targets if you sit there and you overmanage. I make more money away from the screen than I do sitting there. It's just the truth of it. And it may not be true for everybody, but if you're a decent trader and you get good trades that have good moves, the only way you can hurt yourself is by sitting there and taking a really great trade and watering it down to almost nothing. And then you don't have anything to offset your losers. What's next? I don't even know the next slide. Oh, what does it depend on? What does your target actually depend on then? Well, it does depend on the time frame that you're playing, the intended duration you want to hold it. Am I looking to hold for a couple hours all day, or is this a swing trade? The chart target, every chart has areas that are potential resistance or support areas. By the way, most people's understanding of support and resistance is almost nil. The concept of looking to the left is just a fallacy in terms of what's actually there. You have to understand what's there. I use a 4-point process to evaluate support and resistance, because sometimes you look to the left and there's something there, but it means nothing. I'm sure all of you've probably seen areas the stock is dropping and you think, oh, there's support, and it just blows right through it. It's like a knife through hot, it's like a hot knife through butter. And you say, well, boy, this chart stuff doesn't work. That was supposed to be support. Well, I guarantee you, you probably don't really know what support and resistance actually are, because they're not just lines on a chart. They have to be areas built a certain way, and they can become erased over time. Percentage to target. I mean, sometimes my management will depend how close am I. I want to manage and lock in profits. I don't want to manage a trade in the beginning. See, most people, unfortunately, when they get in a trade, they focus on minimizing the loss. And that is the worst thing you can do. It's the worst thing you can do. It's a good thing to do if you're a terrible trader. If all your trades are losing trades, well, then minimizing the loss means that you'll die of 1,000 paper cuts rather than just having your head lopped off. But if you're a decent trader, trying to minimize losses is not your goal. There's nothing wrong with it when it comes up and it's the appropriate thing to do. But if your goal is to minimize losses, you know what you'll end up with? You'll end up with exactly what you're shooting for, a whole bunch of minimized losses. That's not how you make money. Your goal is to maximize profits. And if you spend all day, all week, whatever it is, finding the trade that you want, it's very difficult to believe that 32 seconds after you got into the trade, you're now worried about how to get out of it. I don't do that, ever. You spend the time to find a trade, you try and do the best you can to make the most money from it. Trader's personality and style. This is something that unfortunately has to be worked into the equation, because there's some people that couldn't hold a day trade for more than 12 minutes if their life depended on it. So we have to kind of evolve a style of trading and management around their personality. In other words, this is all what becomes part of your management plan, a fixed concept of how to manage a trade. It does not depend on your emotional state. It does not depend on your prior trade, whether it's a winner or a loser. It does not depend on whether or not you were up or down for the day. It does not depend on the spur of the moment decisions. It does not depend on your fear of being a loser. Unfortunately, this is the list of things that most people actually base their management style on. How does it start? Let me just pause here for a minute before I show you this. I would just like to remind some of you who maybe joined late that if you're not familiar with me or just my trading strategies, just check out the website. Again, when I'm done talking, I'm going to end right at 4. I'm not going to have any deals, offers, or anything. I don't want to use the word insult, but I guess I will. When you want to learn a style, you got to get to know the person you're going to learn from. Even if you're going to, services are simple. If you want to join the room, you can take a trial. You waste a couple dollars, waste a little time if you don't like me. Same thing with a letter. You can try it. It's no big deal. When you want to sign up to learn in the seminar program, it's a bigger cost, and you need to get to really know and like somebody's style, because there are different styles and there's a lot of different ways to make money. But there's also a lot of very wrong things to do out there. And again, if you wouldn't mind just kind of reposting that little coaching session if they want to set up a time with me. There's no charge for that. You want to talk to me about your style, even not sure where to go with your career path, whatever, or trades, that's great. And then also the free stuff page I showed you. And then I also want to, this Friday, if you like what I have been talking about, and again, this is not one simple topic of management. This is just a little piece of the puzzle. But this Friday, I am doing a half-day event that everyone gets invited to. Now I say everyone, it's all the members of DTS. What I ask people to do is just sign up to be a free member. It costs you nothing. You don't need a credit card. Your email is never sold or traded or exchanged. All you get is good educational information. And about once a month, you might get something that resembles something salesy. It's never a sale, but once in a while I say, hey, have you considered, the seminar program or the room? But that's like not even once a month. The rest of the time, it's all good educational information. And if you become a member, you will automatically get invites to all the events I do, such as coming up this Friday. So this Friday, login instructions will go out to all DTS members. So that link there just kind of gives you a quick little rundown of what I'll be going over on Friday. I do it every 6 weeks. It's a half-day class. It actually is the first part of the paid-for seminar program that starts on Saturday. You don't have to be part of it. I do the first half day free to everybody. It's some great information. It's not a sales thing. There's no discussion about you joining or paying anything. It's simply good information that I require the seminar program members to listen to and attend. So I want to just kind of get that out there so that when 4 o'clock comes around, I can just call it quits and say goodbye. So how does this problem start with management? You've probably been in this before, right? You get into a stock, you get into a Forex pair, whatever it is, you get in some futures and you're thinking, wow, I'm making some money. That little thing on the screen is green, the number's growing, I'm doing well. I'm not as far as I want to be. I want to get a little bit further. Okay, I'm going to get there. I'm sure I'll get there. Well, am I going to get there or not? What should I do? Should I take the money and run? I'm not that far short of it, or should I just let it go? Right? What's the problem if you take the money here? Well, the next time it may come up a little shorter and you decide to take it here and then here and then here, right? Have you been there before? And pretty soon you're getting in trades and 1/10 of the way to the target, you're taking money off the table. And again, you're not making money. But of course, if you let it go too far, guess what happens, right? All of a sudden, gulp, I gave up the profit that I had and I actually turned this into a loser. We don't want to do that either. There is a two-part process. Again, it's number one, understanding the mechanics of charts and how you can intelligently manage in a way where you start to preserve profits and yet not give up targets. And the number two, you have to overcome the psychological part of this. The psychological part is overcome through confidence and through understanding good trading. And I explained to people, I'm going to run out of time to do it tonight, but how you get confidence to me is one of the most important things about trading, because without that, you will always be suffering from emotional problems. The number one best way to fight off the fears of trading and the emotional psychological issues you have is through confidence, and you get confidence through a well-laid plan. To get that plan, you have to understand what it is you want to do. And to me, again, there's only one way to treat price action in the market, whether it's the futures, stocks, Forex, and that's through technical analysis. I am 110% technical, and anybody wants to have a public debate with me about the virtues of understanding the economy or about understanding fundamentals of stocks, I'll take you on and I will destroy you, because I have a discussion and an argument that you cannot argue against. And I go over it Friday, so you can be there Friday to hear it if you want to. Some of you may be saying, I sound like an idiot. Some of you may be saying, wow, you know, I've been thinking that. I didn't want to say it because it doesn't sound like it's correct to say that, but you're right. Charts, the market, stocks, Forex, it's a video game. It is what it is. And you shouldn't be embarrassed to say that, because the chart is the only place where truth is actually happening. We can talk all we want to about a stock, you know, the restaurant is closed half the time, the virus this, earnings that, blah, 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 blah. You can form your own opinion, but you know what? 300 million other people have formed their opinion, and that stock is priced at 23.22. Who are you to say that all those people are wrong? And based on the way you read the internet, which is what you're doing when you do fundamental analysis, at least 99.9999% of you are, unless you're like that guy in the show Billions, you're going on the internet and reading what everyone else in the world is reading, and you're deciding the rest of the world is wrong. That's how you lose money. That's how you lose money hand over fist. You acknowledge the fact that this is what's going on, and we use price action to project possible moves. And the two ways that we have, I just did a presentation, you can see it on the website, the 2 times that we have an edge. By the way, again, if you like hearing me talk, all of my presentations are on the website under the free stuff page, and you have access to that without being a member even. So go crazy. And I have 5 minutes left, and what I have here are a whole list of discussion points, every one of which I could talk about for 20 minutes, every one of which I'm just going to introduce to you and have you think about it. When do most of your trades stop out? If I force you for an answer, and if I could see your answers, virtually all traders would say that their trades stop out fairly early in the trade. Like you get in and oops, you got in a little bit too early. That's a great piece of information, if it's true for you, that you can use to your advantage to improve your trading. Next question, what do you do after entering a trade? If you're entering a swing or a long-term position and you're at work checking on your phone every hour, there's something wrong with your trading style or management style. If you're in a day trade that you expect to last half a day or all day, and you're sitting there with your hand on the mouse, looking at the futures or looking at a 1-minute chart, you're messed up, and it's never gonna produce profits for you. Did you not have any idea how to get to the target, or did you know how and just didn't do it? This is a very important distinction you need to check for yourself, which is to go through the trades that you did, to look at where your projected target was, and to start doing some what if analysis. Like, what if I never managed this trade? Would I have made more money or less? Why did I get out of the trade here? Was it based on a well-laid plan, or did I just decide, spur of the moment, trading from the hip, boom, seat of the pants, I'm gonna just get out here? This is what costs traders money. How many of your trades closed out with a final risk reward of over 4, over 3, over 2? The traders get all hung up, and if I ask people what risk reward do you need to enter a trade, I get this universal answer of either 2.5 or 3. And yet if you look at the trades that people say that you need that, and you look what they actually take, they never even get 1. So what's the point of going for home run trades when you don't even make it to first base? I use the analogy of Babe Ruth. You know, Babe Ruth had a record for being the #1 home run hitter. He also had a record for being the #1 strikeout king. Was it worth it? Yes, it was, because when he got his home run, you know what he did? He actually went around the bases. You know what some traders do? When they get their home run, they make it halfway to first base and just head for the dugout. They don't get the home run. If you're going to strike out half the time, that's okay. But you better get some of your homers and actually make it around the bases. Tight stops are a conservative way of trading or investing. Absolutely false. If you think that, well, you should attend Friday because I don't have time to go into it today, but you should have fixed risk amounts. And tight stops just mean more stops. You never give a stock a chance to get going. I teach the reverse. Be in trades, make money, make consistent money, keep making money. Management is the battle of the biggest fear. Confidence in a well-laid plan are the defenses. What is it the case that you should be perfectly calm? Why is it the case you should be perfectly calm when managing? The reason is because management is very easily predefined. In other words, I should be able to know exactly when the next time is that I could even invoke some management concept. And until that happens, there's nothing to do. I don't need to be sitting there. If I'm playing a 5-minute chart and I'm waiting for a support area to form, I know from my chart knowledge that cannot happen for at least 6 bars. That's 30 minutes. There's nothing I can do the next 30 minutes. My trade may stop out. Too bad, it stops out. But I don't need to sit there staring at it. Why is it easy to have a management trading plan? Because management is a very fixed environment. You have an entry, you have a stop, you have a target, and the question is, what do you do in between those 3 numbers? Very simple to do. On this last slide here, I'm going to just blow over here, just kind of because I'm out of time. But it just shows the concept that so many people have this other wrong concept that you need to get the trade to break even. When I hear somebody say they're getting a trade to break even, they're a rookie, they're a novice. Break even doesn't mean anything. You need to follow chart management concepts. And so many times people get a trade to break even only to have it stop out or trail out for even, and they lose the big money. There is a saying out there that's called missed money is better than lost money. Do you think that's true or false? I've said it before to new traders sometimes, but in general, when you become a good trader, this is a bad saying. At least I don't agree with it, because it is not acceptable to miss a good trade. Yeah, nobody likes to stop out. You stop out, you lose your one risk unit, whatever that is, $100, $500, $1,000, whatever you're trading with. But if you miss a good trade, you may miss your week's salary. It's not okay to just miss a trade and say, oh, well, missed money is better than lost money. It's not necessarily. Not if you're a good trader. In the beginning, maybe, because you tend to overtrade. Folks, it's 4 o'clock. And again, I want to thank you, Sherry. The free stuff page, if you go to DTS, it's Disciplined Trading, I can't even say it. DisciplinedTradingStrategies.com. It's a mouthful, but once you go there once, Google will take you there every time. I call it DTS. Disciplined trade. If you're confused, just Google disciplined trading, and I'll be the first thing there. Check out the free stuff page. Look around the site. Do what you want to do. Sign up for this Friday. Become a member. And just real quick, for those of you who are looking to day trade but don't have the required $25,000, email me. This is not something that I do personally. It's a service I do for people. I have a place that you can be trading without any hoops, without any levels, just simply trading with the risk deposit, and it's all safely secured money. And there it is. I'm gonna leave you on this slide, which is saying this Friday the 17th, Introduction to Mastering Technical Analysis. And again, if you go to the home page, you can click right on the center. You'll see where you get invited to that. And Sherry has typed it on the screen a couple of times. It is 4:01, and I look forward, if any of you want to, like I say, contact me, set up a time to talk, or if you just want to visit the website, or hopefully I look forward to seeing some of you this coming Friday. Thank you for having me, Sherry, and have a good day,
Paul, I want to
everybody.
thank you very much. You do have a question here. Someone that wants to book some of your time with the link that we put there to Calendly, he's asking what info should he have to make the best use of your time?
If he just fills that out, he will get a return email that will instruct him how to proceed in terms of, we'll ask a little question, what do you want to talk about? And also ask him preferences about whether he wants to be on a mic or a phone or go in the room or that kind of thing. So just fill it out.
So you've got a form for him to fill out. Yep.
Yeah.
All right. And then, someone did ask, why is trading like playing a video game?
Because you are looking at the information in front of you. It's like flying an airplane. What matters is price action. What matters is what you're seeing on the screen. In other words, if a stock just announced the best earnings in the world, and after opening up slightly, it starts to fall all day, are you going to continue to go long because you were just told it was the best earnings in the world? Are you going to continue to short the market this last week because you think it's insane that stocks can make more money than they did last year with the coronavirus? We ignore common sense, we ignore all, and it's hard for people to do, sure, because everybody wants to be smart and try to outsmart the other person by getting more information. But that's, remember, 95% of people who come to the market without training lose. So we want to follow what's actually happening. And when you understand price pattern, we're always looking for that battle that occurs. And I like to refer, when I teach, I like to refer to like what an old time battle in either Civil War or back in the Viking days where two armies fight. And we're always looking for the winner of the battles over a consistent period of time. Little battles get won, and then the big war gets won. And we always want to look for those battles because that shows who, big money wise, is buying or selling. And that's how we make money with great odds.
Okay. Well, I really appreciate everybody who came. I just want to, I'm going to bring back my screen, I think. Here's me. I just want to show you that this webinar is going to be uploaded. It'll be at that URL there, but you go to our TradersExclusive.com, you click on Traders Education, go to Educational Webinars, and at the bottom you can see where we have archived Trader Education webinar videos. But there's also a list there of all of our webinars coming up. We have some great people coming in with some good information. The bottom line is to have get traders in front of people that can help them grow and learn. So everybody who's still with us, you will be getting emails from the speakers here, so you can pick and choose who you're going to stay with. And I want to thank everyone for being here. And we'll see you actually next Wednesday, the 22nd. We have another webinar coming up for everyone. Thank you so much, Paul. And with that, we'll say farewell. Hope you guys all have a great week and great results. Bye-bye now.